All right, we are live. Let's go ahead and get this stream rolling. Everything looking good on my end. Okay, great. Welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is Wednesday, 11/10/2021, 8 p.m. Eastern Standard Time. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, great. And just for the record, I have decided that for our Wednesday and Sunday streams, even though daylight savings time has changed the market close or like the 24-hour candle close, I'm going to keep the stream times the same, my time. So it is still going to be this time every single night, Wednesdays and Sundays. Not every single night, but Wednesday and Sunday. So that's 8 p.m. Eastern Standard Time till roughly 11 p.m. Eastern Standard Time. So, but yeah, everything looking good. Let's go ahead and jump right in. Obviously been a lot of craziness in the markets today. Let's go ahead and talk a little bit about some of it. So we'll get started where we always do with the 10-year Treasury yield. So obviously this is important because this is basically the cost of money. So if you got to figure out, are things going to go up? Well, is money cheap or is it expensive? Historically, it's cheap, but it just got a little more expensive. Did have a roughly, it was a 9% move today on the yields for the 10-year Treasury. Obviously did not have a particularly great 30-year Treasury auction today. I'm sure you probably heard about that as well. But none of this is any surprise to us, as once we confirm back on top of the 200 exponential and simple back in December, basically a year ago, we knew that these had entered into a bull market. This area here was a little bit sketchy. Looked like there was definitely some potential to lose the trend, but we were able to maintain the 200 simple moving average. And now here on our retest, we came down, didn't even get down to the 200 exponential moving average, and have found support on the 200 simple. So close and consolidation here. We'll flip the 8 and 21 back over on the TJD master, and then we would expect to continue to the upside. As of now, we do technically have a high back from March of 2021 to our most recent high in October 2021. So technically we have a lower high right here. So there is still a possibility that this sells off and breaks back down. But once we take out, what amounts to this daily candle close at 1.75% yields on the 10-year Treasury, that all but confirms that we are in fact in a uptrend and that this is just a temporary reset before a continuation to the upside, which is at this point in time what I suspect will happen. But we are starting to lose momentum on the TJD, TDMACD. The slope has flipped over red. So there's still a possibility for this to go either way on the TJD, TDMACD. But if we look at the jewel thief down here, we'll see we're inside of the bearish control zone. We have exited the bearish control zone, and we have a powerful knife signature to the upside. So typically what will happen in these areas is we'll usually get like a retest or a breakout followed by the hard buy signal. Now in this case, because of the purple stochastic being so high up still, we could easily see sideways action here or even potentially more downside. But again, the main thing we're paying attention to for the trend on the daily is the 200 exponential and simple moving average slope. So as long as these are blue, and we're above them, obviously, that is going to tell us that this is more likely than not going to be continuing to the upside. So I'm not going to take a look at the long term. So let's look at the TLT next. We'll see obviously on the 20-year Treasury that basically this was attempting to regain the trend, broke back above the 200 exponential and simple. The same way the 200 simple, even though it broke above and below, the 200 simple in this case has not flipped back over blue. So as long as this one is still pink, this is technically still not confirming an uptrend. And obviously these two things are going to trade inversely. So while we're up inside the bullish control zone right here, this breakdown back to the 200 exponential is good temporarily as we have held support. But again, we want to make sure that this actually maintains and breaks above that previous high from back in July. If it does not break above the previous high, it's going to look like a lower high and breakdown. If it does, it's going to look like continuation to the upside. And if we spend enough time on top of the 200 exponential and simple, we would expect the 200 simple to flip to the upside and then see continuation. But as far as things are concerned, at the moment, it looks more likely than not that, you know, with the taper going on or beginning of the asset mortgage-backed security and treasury purchases, it seems more likely than not that we would actually see the rates rise, you know, which would mean that probably treasuries will fall. But there's still a lot of external forces as well. So we need to just keep an open mind with these things. U.S. oil obviously had a pretty violent sell-off today, a bearish engulfing candle, what amounts to essentially a double top. We had put in a top here, a retracement to the 236, confirming that we had more than likely put in at least a temporary top, came back up, retested that level. We were unable to maintain that level, got a bearish engulfing candle. Now we have broken down below the 8 and 21. Looks like more likely than not we will come back down to the 236 and probably either retest the green support, which was a previous high from here and longer term Fibonacci level, or our 382. But we would look at that area as potentially a temporary bottom at least. We already got recently a retest of the 200 exponential and simple. So I wouldn't expect it to come down to that level. And I would expect that previous all-time high, or I'm sorry, previous cycle high to act as support. But if we kind of zoom out here, hate this chart. Yeah, maybe not. Might have to go to a longer time frame. Yeah, let me just go to the longer time frame for simplicity's sake. Matter of fact, I'm going to just tighten this up just a little bit there. Maybe that wasn't enough. Okay, there we go. So if we go back to that, we can see that this green line here is the 236 from the all-time high. So we have the 236 here in green. We have the 382 all the way down here in green as well that lines up with the 0.5. So while it is possible we could get a more violent sell-off, I would expect this 236 at least temporarily to act as support. So it seems likely that we would find support somewhere between the 236 and the 382, you know, micro and macro respectively. But at this point in time, we did get the hard sell signal, left the bullish control zone, came back up, failed to put in a new high. And then obviously now we're losing momentum on the trend. We're close to confirming the 821 to the downside. So more likely than not, we'll see at least a temporary short to midterm like pullback on U.S. oil. Should we? Yeah, all right. Let's just keep going through here. And then, well, we should probably just look at the dollar now. We'll just jump over and take a look at the dollar. So obviously the dollar has those laser eyes. DXY is just absolutely crushing it. You know, this big green candle right here, you know, taking out the yearly high and basically a new high off of the bottom. Basically just confirms what we've been saying, what I've been saying, you know, this entire time, that the dollar is entering into a parabolic uptrend, and we just hit our target to the upside on the weekly. So again, we were in a long-term downtrend. Basically on the daily, we broke down in May of 2020, and then once again found resistance here, broke back on top of it, found support, flipped the 200 exponential and simple back over. The slope turned blue on the TJD master, and then obviously found support at a higher low, started to put in a series of higher highs, and then once again, you know, confirm the uptrend, continuation to the upside. And then if we just put on our drawing tools as well here, we can see very clearly that we have an ascending resistance line here in red. We've nearly reached that. We have our bottoming patterns, the head and shoulders inverted. We have our Adam and Eve bottom right here, or even Adam, you know, here. And then we have the break of our neckline, depending on how you're drawing it, somewhere between 92 and like the 93 level. Once we broke through that level, came back down, tested it as support, found support exactly at our blue blocks area here as expected. And now we're seeing that continuation to the upside. So the measured move of, depending which bottoming pattern you're looking at, is going to take us more than likely up to like that 96 to 98 range roughly. But we do have some key resistances along the way. So paying close attention to those levels. But obviously, if you've been watching this channel for any amount of time, you know that this was expected, you know, contrary to what literally everyone else on earth thinks, that the dollar is going to zero. It's a race to the bottom, blah, 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 blah. Yeah, so, I mean, at some point in time, everyone will admit that they were wrong. I don't really care if they do, because we will be positioned way ahead of time. So we discussed this in our last stream and many streams before that, that what we were expecting here after breaking through that double bottom pattern was initially a retest of the 200 exponential. We consolidated at the 200 exponential. That is very, very bullish. Typically, when you come up to a moving average, if you're going to get rejected, you will get rejected violently off of that. When you get a small rejection and then consolidate at that level, you're basically eating through the sell orders, or in the opposite way, you'd be eating through the buy orders before the breakdown. So that typically tells you you're going to see continuation in that direction. Our expected target based on moving averages on the weekly from the 200 exponential was the retest of the 200 simple. We reached that today at 94.8. We are now inside of the bullish control zone. We have momentum in our favor, blue slope line, multiple green histograms above the 200 exponential moving average on the weekly. And, we still have 2 days, but I would imagine this will probably close right at or around the 94.8 level. If it closes above it or well above it, it's going to look more bullish. If it closes at it, even gets a slight rejection, that will be fine. I would expect it to consolidate in this area and then see continuation. But, once again, now we are officially, at this point in time, we have blue slope line now on the weekly as well. We have it on the daily, and we're above all of those moving averages. And then if we switch over to the monthly, here on the monthly, we can look at the longer term picture. We are obviously in a long-term downtrend since the 1980s. We put in a peak before that in 2001. So if we have 1985 back here, then 2001, then we peaked out again roughly in 2017. So from that point in time, this is basically like 16 years between each peak. From that time, though, we closed back on top of the 200 exponential, came back down, retested it, and then recently in 2019, December, we actually confirmed by flipping over the slope blue. And now we have the 200 exponential on top of the 200 simple. Both have a blue slope, so they're sloped to the upside. And then obviously now we have closed our monthly. This is our first close above it, second close above it, and now this is our third month of continuation above the 8 and 21. So unless we close this month below 93.56, we will have literally everything pointing to the upside on the DXY. So we have the hard buy signal coming out of the bearish control zone. We have multiple drives of bullish divergence taking place. We have our green histograms. We're above the zero line, and we have officially crossed at or nearly crossed the red slope line. So when we flip that to the upside, flip that blue right there, that will be the final confirmation. When the 821 crossover, that will be the final moving average confirmation. And then we would expect continuation to the upside, at which point in time our targets will be the previous highs here at roughly 99 and 102. But if you've been watching this channel for any amount of time, you know that this is the first time on this entire indicator going back to 1985, on this chart here, that we have ever actually closed above and gotten the slope on the 200 exponential and simple, because this is 200 months to populate just one bar of the moving average. So at this point in time, we're likely to enter into a multi-year or potentially decade or multi-decade uptrend in the dollar. So, while everyone is hating on the DXY, hating on the dollar, saying it's going to weaken, get out of your dollar, spend your money as fast as you can, inflation, all this crap, money printing, 40% of the money supply. And you could say whatever you want. You can give me as many fundamental things as you want. You can stand there and scream at the top of your lungs as much as you want. But what this chart is telling us, what this is telling us right here, is that the DXY, the dollar in comparison to the other basket of currencies, is strengthening and likely to continue doing so for multiple years. And it is literally only getting started. So just this previous little green little uptrend right here between the 821 cross right there crossed over in September of 2018, and it did not cross down until June of 2020. So that was multiple years, and that was before we even confirmed the 200 simple moving average to the upside. So as long as we stay on top of these two moving averages, I would expect parabolic move to the upside on the dollar, possibly even a retest of the previous cycle high from 2001 of like 120. So again, can make as many arguments as you want. I'm talking about the actual technicals and what the charts are telling us. And as long as this dollar is strengthening compares to the basket of currencies, does it mean that all assets are going to get crushed? No, it does not mean that. It means that money is fleeing to the dollar, not to the foreign currencies that are in the basket of currencies. And then also, this gives us an overlying picture of not just the currencies that it's compared to, like the euro, like the pound, the Canadian dollar, etc. But if we see weakening in other markets' currencies, other countries' currencies, we will probably see strengthening in the dollar as well, because the dollar is the world reserve currency. So, but obviously this is causing extreme pressure on the markets right now. All right, so let's switch back over here and we will just continue with the Dow Jones. So obviously we saw quite a bit of weakness, basically our second or third day in a row. I spoke specifically about this, essentially being a potential island top reversal. Typically depending on how you're looking at it, you can have a single candle, indecision at the top of the range, or you can have a multiple candle pattern telling you that we are likely topping out. In this case, we basically have a island top reversal. So, we have an isolated candle here, a slightly higher high, indecision candle, and then we break down aggressively from it, and then we bearishly engulf, fill the gap here. So does it mean we have to have massive continuation to the downside? No, not at all. We could easily just come back and retest the previous high at 35,559. But we did get the hard sell signal, multiple red histograms, and basically we're butting up against like that resistance level. So I'll have to see how this plays out. Obviously, nothing to be worried about at this point in time. But a few percent pullback on these. It wouldn't be unrealistic to think that we're a little overdue for these pullbacks. So S&P, SPY came back up, retested that yellow line that we broke down from, put in a slightly higher high, and now we have failed to maintain that level. Same exact thing, basically breaking down island top reversal, hard sell signal, multiple red histograms. So I would expect a pullback at least to the previous high of 453. But we can start putting in some Fibonacci levels once we get a further correction. Next, we have the Russell. Spoke specifically about this in advance, how I did not expect follow through to last on the Russell. We obviously broke out after consolidating inside of this channel for month after month after month, basically the entire year. We entered into the channel in January of 2021, went sideways the whole entire time, broke out to the upside, and to me this looks like a throw over, a failed breakout. Now if we come back down and we retest that 2347 level and it holds, we could easily see continuation to the upside. That would be absolutely fine. I would not expect anything less than the measured move of 2567 if that holds. But if it fails, I would expect us to come back down to retest the 200 exponential or simple moving average and the heart line of the channel. So which one do I think is more probable? Well, the Russell has been performing like crap. So with the exception of this little breakout right here and people FOMOing in at the last minute, I would expect it to continue performing like crap. So so red histogram, bullish control zone, possibly getting ready to cross down, and hard sell signal. We'll have to wait and see, but does not look good. IXIC, Nasdaq, we obviously moved to the upside, hit our measure move of our ascending triangle pattern, overshot that slightly with this last little pushback up. Again, retested the breakdown of our blue support line, and now we have broken down below it. It failed to hold. We could easily see this move back up, but if the rates are strong and the DXY is strong, I would expect this to be weak. So more likely than not, we'll be coming down to retest our previous levels of resistance. So I would expect at least an initial retest of 15,365, potentially coming back down and retesting some of our key Fibonacci levels and previous highs as well. So, we're not too far above the 200 exponential and simple. So retest of any of these levels seems realistic right now. Hard sell signal leaving the bullish control zone. Multiple red histograms. This is not unexpected. We were at unsustainable levels. We were at nearly 100 on the stochastics. We're at like all-time highs on the histograms. So, this is very, very expected. XLB material sector, once again, breaking out of what normally would be a bearish descending triangle, broke out to the upside, consolidated, and saw some continuation. Got the majority of the measured move here, but it looks like we have run into resistance at the previous all-time high. As of now, it's holding. We do have a slight gap down below it. If depending what happens in the rest of the markets, they all look much weaker than this does. This breaking to a new all-time high and potentially getting the measure move up here to 93 still seems possible. But, if there's a lot of pressure on everything else, I don't expect materials to do particularly well. XLC communication looks much weaker than the majority of the other charts we've looked at today. Looks more than likely like it's going to come down here and retest 200 exponential and simple. XLY, consumer discretionary, overshot our target to the upside. We obviously had the conservative measure move of our ascending wedge. Got that nice break, continuation, went up slightly higher than our target here, and then we saw some weakness come in. Obviously some pretty heavy bearish looking candles here, still above the 8 and 21, but at this point in time, a retest of the breakout levels seems more likely than not. So, 190 probably looks like the next target. We do have obviously multiple red histograms, hard sell signal at the top of the range, so this was no surprise. XLE energy, we have the bearish topping pattern or divergence pattern, sell by sell. We have left the bullish control zone. We're consolidating at the top of the range, but this is a very aggressive bearish candle coming in here. We have broken down below the blue slope line, multiple red histograms. So this looks like it's going to have some continuation to the downside. We would expect at least some temporary support around 56, which is our previous high right here. If that does not hold, then we get the 821 cross back to the downside. Seems more likely than not that we would come back down to around the 200 exponential and simple, somewhere around like 51, 52, something like that. Obviously, our measure move for the inverted head and shoulders played out, overshot to the upside and the previous high, or a retest of the 236 from the previous high rather. Holding on to the 618 for now, but I think more than likely we probably will see something like this in the near future, possibly even an overshoot of that. We will have to wait and see what energy does here. XLI, industrial sector, again, looks very similar to like the Russell chart, where we basically consolidated for, the better part of the year inside of a channel, got the breakout of the channel, and now here we are looking like we may potentially have a throwover situation where we move to a new high, take out stop losses, or get people to FOMO buy in, and then it breaks down because the rally is unsustainable. So as long as we're above this level here at like 106, still looks okay. The longer we consolidate up here, the better. But if we do break down from that level, I would expect a retest of the heart line at 102 and possibly much lower. We do have the sell signal at the top of the range, still inside of the bullish control zone, but the stochastic has broken down, gotten rejected. So this typically will see follow through to the downside. And also we see some very clear bearish divergence between those points. And then obviously seeing a little bit of weakness come in on the TJD TDMACD. If you're interested in getting these indicators and you don't have them already, they are all free. All you have to do is go down to the description of the video and you can search them on TradingView, with the exception of the TJD Master moving averages. That one is for group members only. If you're interested in joining the group, you obviously can. Just let me know, shoot me an email or contact me through the channel. That is completely fine. The indicator is free with your monthly membership. Permanently free. Once you join, you get it forever. So XLF financial sector obviously came up here. We slightly fell short of our target of the 1.618, basically topped at the 1.5. But as far as I'm concerned, that's good enough from our previous all-time high. Now here we are once again showing weakness. So more realistically than not, we'll probably just come back down, retest the breakout level at like 38. Hard sell signal, multiple red histogram, slope line has flicked over red. We are technically still above the 21, in between the 8 and 21. If we consolidate here long enough, we would expect these to flip back over red and move to the downside. So XLK looking slightly stronger for now. Our tech sector obviously going to be feeling the most pressure from rising rates, as obviously has the highest multiple valuations. I have spoke specifically leading up for like the last couple weeks, months, whatever, about multiple compression, and this is going to be a serious issue. So in my opinion, the longer that tech can just hang on and go sideways, the better. If it starts to sell off and we see this multiple compression come in, it could really be in some trouble, as the valuations are like through the freaking roof. So last quarter definitely helped, last couple quarters, but these things are still at literally record levels, all-time highs, multiples. Many of them are not even based on actual earnings. They're based on sales because they're non-profitable companies, which is obviously indicative of a massive bubble created by the Federal Reserve and friends. XLK technology is looking decent for now, but it looks very likely that we come back down to like 159. Hard sell, seeing a little weakness on the histograms. XLP, consumer staples, retesting the previous all-time highs right here. More likely than not, going to see consolidation and then continuation to the upside. This looks much stronger than most of the other sectors do at the time. And then obviously consumer staples, the type of thing that even though there is inflation, we could still see these continue to the upside, as people don't have nearly as much of a choice when it comes to like consumer staples, because people aren't going to stop buying the things that they, I should say, want but need. They're going to be less likely to cut these out of their daily life than they are some of the other like speculative or like frivolous purchases. XLU utilities, basically just getting walked up by our 200 exponential and simple moving average. Hard sell signal, still above, well above the 0 and the slope line. Not particularly strong, but looks better than most. We really wanted to see this breakout hold, but we saw a double topping pattern. Came back down to our buy area, reclaimed the 200 exponential and simple, but now here it looks like we're putting in what amounts to like a triple top right here. With obviously like the throwover or failed rally. If this area breaks down, I would expect us to revisit the 200 exponential and simple, potentially as low as like 63, 64. A break of this pattern will look extremely bad. So do I think that's likely? Not very likely at this point in time, but definitely worth paying attention to because it could be a very violent move to the downside if it does happen. XLRE real estate, obviously looking much more like we discussed, like a double top at this point in time. We have broken out of a key resistance, which is good. We want to see this hold. If we hold here long enough, we could easily see continuation and these trade setups play out to the upside. But we already have the hard sell signal left the bullish control zone, multiple red histograms. Still above the 8. Looks okay. We'll have to see what happens. We've obviously seen a couple canaries in the coal mine, maybe Zillow, maybe some of the housing market slowing, some issues with labor, decrease in loans, loan applications, approvals, potentially rising rates going to cause, housing prices to compress as obviously the rates and the prices, work inversely. So we'll see what happens here. If rates start to rise, I would expect this to fall. And then, there's obviously a lot of other factors as well. So XTN transportation, again, very powerful move to the upside here with like that breakout, little squeeze action going on. Obviously saw some aggressive moves with like some of the rental car meme stocks and whatnot. But at this point in time, pretty aggressive red candles coming in there. We'll see how this looks by the end of the week here. But it looks very likely that it's going to at least come back down to like 93 and retest these levels. And then we obviously see the sell by sell divergence signal at the top of the range. Pretty hefty rejection candle. So even though we swept back up to retest the highs here, I never like to see a candle like this at the top or the bottom of a range. Typically, that is a topping or bottoming candle. Just because if you have an aggressive candle to the up or downside, and then at least 50% of that candle is absorbed by the wick, typically tells you that there are buyers or sellers at that point. So in this case, we have quite a few sellers stepping in, and then each candle of continuation looks worse and worse. And now here we are back at the end of that candle. So more likely than not, we're going to come back down here, retest this. If it holds, continuation to the upside. If not, probably an aggressive breakdown. I've discussed this many times. This is a very, very common thing that you see. You'll see a ascending channel to the upside. You will see a breakdown from that channel. The measured move does not get hit of the breakdown of the channel. You will then see consolidation, continuation back to the upside. You will see a failure to regain that channel or reassess itself in a strong uptrend, and then slowly but surely, this will just like bleed back out, and then you'll see like the continuation to the downside. So at this point in time, this looked very toppy. We took out that high. So if this doesn't hold, it's going to look like basically like, a short squeeze or a failed breakout. And then I would expect heavy continuation to the downside. But I would expect this to still strengthen into the end of year as, fundamentally, typically this chart will top out around January, based on like our macro cycles, cyclical analysis. Hail, obviously, ETF for a bunch of, it's got rental cars and all kinds of other good stuff in there. Obviously got the breakout of our descending triangle, essentially that move back to the upside, underperforming the measure move, but reclaiming the 200 exponential and simple here. If this area holds, we could easily fix this trend and continue to the upside, but we do see the divergence signal on the jewel thief, sell by sell, multiple red histograms. So we got to be real careful on this one. Again, same type of thing though. I would expect this to consolidate and possibly even move up further going into the holiday season and topping out closer to like January. And then we have Jets next. We saw a fairly aggressive gap up here on Jets. I'm not particularly bullish on airlines in general, for good reason. Obviously, these things topped out back in 2014, and with everything going on, basically capitulated, got bailed out by the government, and still are nowhere near even our consolidation level that lasted for, 7+ years, almost 10 years. So the fact that we're not even able to reclaim those levels and, all the different mandates and things going on right now, lack of travel, lack of people wanting to travel, lack of people doing business travel. I'm not sure that this ever reaches all-time highs again, especially not adjusted for inflation. At this point in time, we're basically barely hanging on to our green support line here. And it looks a lot like a second rejection off of the 200 simple moving average. So again, while I would expect this to strengthen into the holiday season, it would not be unrealistic to think that this does in fact break down. So not particularly bullish on jets or airlines for that matter. UPS, obviously trade setup played out beautifully, over a 15% move to the upside, off of our entry down here at the 200 exponential and simple, came back up, retested the highs, obviously a nice little gap up. So now we have our gap fill to the downside, which filled as expected. We have our gap fill back to the upside, which all but filled as expected. And now we have left a slight gap once again on this gap up here. So now at this point in time, we basically just have a slight little gap to the downside right here. But I am out of this position and will remain out of this position at least temporarily to see what happens. But, as expected, once again, we expected this to strengthen into the holiday season. And I think it still puts in all-time highs before the end of the year anyway. So, but we'll see how that goes. Let it consolidate for a little bit. Fedex, obviously the first of the trade setups for Fedex has played out as well. Roughly 3-to-1 risk reward ratio, 11+% to the upside. Obviously very much underperforming UPS. Not in general. I mean, although that's probably true with Fedex, I'm talking about the actual technicals. But once again, got the gap fill close right here, hit the target. Is it potentially possible that we get the second trade set up to play out as well, for a total of 20% to the upside? Yeah, it definitely is. I think there's definitely a high likelihood that we retest the 200 exponential and simple up here, closer to 260 to 271. Still have momentum in our favor. Sell buy, potentially going to get the sell again. Definitely wouldn't get greedy with this one, as overall Fedex not the best performer in the space. All right, let's keep on ripping through these bad boys. All right, so Tesla obviously played out exactly as discussed. Multiple things to pay attention to here. Obviously, we had a fairly bearish pattern developing. We were able to maintain the 200 exponential and simple. We continued to the upside inside of our channel right here. We finally took out the previous high right here at 782, at which point in time I said it was very likely we'd be putting in new all-time highs. Came back up, retested all-time highs. After we did, we gapped straight to the upside and got the measure move of the channel as expected. And we will also notice that it came in perfectly with the 1.618. So trading very, very technically. Spoke specifically about how I knew Elon Musk was going to be selling a bunch of Tesla in the near future, because he had a $10+ billion tax bill due and had not really taken profits. So his two options were to borrow $10+ billion, and potentially pay interest on that to pay his taxes, or to close out those positions. So obviously he had some options positions from 10 years ago that he has the opportunity to basically exercise from a $6 strike price. And as expected, he did exactly that. This was anticipated, expected, no surprise. He even put out a Twitter poll to get the Tesla cultists to vote in his favor. The woke crowd said, yes, we want you to sell your Tesla stocks and pay for taxes, and don't be a cheap scumbag, be a nice guy and help all the poor people out there. And he did exactly that. So once again, the ultimate chef, the doctor of the earnings reports, the master manipulator, Elon Musk, the richest and quite arguably most intelligent in many ways man alive, has once again manipulated the masses into exactly what he wanted. I think it's absolutely hilarious. From that point in time, obviously Tesla has sold off 1242 down to 1,000. So roughly 20% or so, a little less, 15% or whatever. His brother obviously capitalized on the situation as well. I don't blame him. I would have done the same thing. Absolutely beautiful. Sell by sell, divergence signal at the top of the range, 1.618 target, measured move of the channel. It's almost like Elon Musk uses technical analysis, Twitter, and, basically like the woke Tesla cults to his advantage, which he obviously does. And he obviously doesn't give a damn about the SEC or any regulations. He has more money than he needs to just tell them to fuck off. He literally has the definition of FU money. So multiple red histograms, hard sell signal, left the bullish control zone. Pretty aggressive candle, I would say here. Seems very likely that we'll come back down and retest the previous all-time high. I would expect it to hold at 900. We'll have to wait and see what happens there. But more likely than not, I would look at that as a buying opportunity and a gap fill before continuation to the upside. But obviously, Tesla has a ridiculous valuation. It's worth more than all the rest of the auto producers combined. So whether you want to call it a tech company, a auto company, or just, a moon boy momentum stock, whatever, the fact of the matter is the valuation is just ridiculous at this point. So if it broke down below that 900 level, I would expect it at least to get a temporary bounce, put in a lower high, and then see continuation to the downside. I don't think it's just going to capitulate tomorrow. The amount of volume that came in on the breakout, and then also here at the top though, tells me that there is a moderately high likelihood that this is at least going to be a top for a while, maybe forever. So Discovery, haven't spoken about this one recently, but have been paying close attention to it. Obviously, the Archegos blow up, ran this thing up to ridiculous levels, but it has been unloved, unwanted, and undiscussed. But, I'm paying close attention to this because it had a previous top back here in 2013. It had the blow off top in 2021. And then now we have been basically just trending down consistently since then. But if we look at this on the daily, we'll notice that we have switched the 821 back to the upside here. We have the blue slope line. We have the hard buy signal. We're now inside the bullish control zone. And more likely than not, I think we'll at least come up here and retest the 200 exponential at 29, if not the 200 simple at 35. I think I have. Yeah, okay. So I think that lines up with the 236 in orange, which is from the top to the bottom, and then also the 618, which is from the bottom in 2020 to the top right here. So more likely than not, I think we will see continuation to the upside, and what amounts to basically just a retest. Do we get all the way back up to the 0.5 and the 200 simple moving average at 36.35? I don't know. Do we see continuation? Again, it depends on what the market does. But I think we more likely than not are going to see a decent move out of this in the meantime. I mean, just from where we're at now, just the retest here is 12.5%. The retest of the 382 and 0.5 is 33%. So assuming, that you did not already take a position on this, we'd be looking at basically something closer to that. So there is still plenty of meat on the bone. Obviously, let's say you were just entering now, or I was just entering now. I would be looking at basically like a 2-to-1 risk-reward setup. Obviously, it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research. Trade responsibly. But, this thing definitely went higher than it should have because of Archegos. But I think it also overshot to the downside as well. So, because it is an actual legitimate company. It's not a crypto or something. Uber, as discussed, getting rejected here, obviously putting in a very toppy looking, double or triple top pattern, retesting the lows, a breakdown from this level, likely going to give us that measure move breakdown and the retest of the lows and gap fill at like $40. So quick little move down, 10% from where we're at now. And then we see also a lower high on our TJD, TDMACD, failure to get back above the slope line, and rejection off of our 200 exponential and simple. So while this has played out pretty well to the upside, I do expect it to come back down here and eventually hit our target, the orange 786 or green 382, as expected. Uber. Pinterest, obviously been discussing this one. Expecting a potential move back up to the upside and gap fill at like $57. Nice little like 20+% We are rounding out the bearish control zone, multiple green histograms. Still a little early on this one. I do have a small position as of now. Basically, what are we looking at? Here's our trade setup, 23% to the upside for a retest of the 200 exponential moving average, potentially higher of 200 simple. We could even get a very aggressive move back up to fill the gap that we left behind at like 71. I think that's very unlikely at this point in time, but possible. And this thing has been trading very, 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 very technically, called the top perfectly up here, rejection candle. We did a 32% move after that one. We did another quick 20% move after that one, and now potentially a 23 to like 75% move, depending what happens here. So not going into this one like super heavy aggressive or anything, as we did just put in a new lower low on the cycle, but definitely paying some attention to this, as once again there's definitely potential here, and this is an actual company. So and they did just have their earnings and everything as well, and wasn't bad. Snapchat next. Same thing with Snapchat. Obviously, we're able to, call out this massive dump down here. Left a pretty big gap. I was expecting it to come down here and fill the gap from the move up, and we obviously overshot that. So it's definitely some potential for us to come back up here eventually, at least retest the 200 exponential and simple, potentially even come back all the way to like that $70+ range, fill the gap. We see obviously bearish control zone. We are very close to crossing the stochastics back to the upside and getting the hard buy signal. We have a bunch of green histograms, and we are basically, it looks like we're trying to carve out a bottom right here. This candle obviously a little aggressive to the downside. But still in this position, at least for a short-term potential move to the upside of 15% with a 5% stop loss, roughly a 2.7 or 3 to 1 risk-reward ratio. Definitely possible we come back down here. This is, again, still a smaller position. I would basically just enter into this trade setup, which was the initial one that we were paying attention to from before, which is a 5% stop loss if we break down below the 236 and our green support line here, with a 40% potential move back to the upside. Once again, if we fill these gaps, if not, they can't all be winners. But as far as I'm concerned, seems rather likely that we do come back up here sometime in the near future. But if not, we will just on to the next, on to the next. Peloton absolutely getting destroyed as expected, continuing to just melt down. Complete meltdown. This thing is like a iceberg and global warming. This was our measure move of the descending triangle right here, and we took that by just taking the meat of the triangle itself, and obviously just moving it down there, it just looks bigger because of log scale. But obviously we're expecting this to happen. The breakdown from the descending triangle, the loss of support right here, the absolute patheticness, the garbageness of this company, the attempt at, transitioning to a subscription model in an already niche market for people that have already purchased your product to continue to use them, doesn't make any sense. It's a garbage company. They can't deliver their products. They're basically just straight up trash. They might as well just trade their ticker symbol to Nordic Track or any of the other workout equipment that has gone by the wayside, that has gone bankrupt and eventually gone away completely. Obviously their earnings were crap, the company's crap, and I would expect continuation to the downside. Could it get a bounce back sometime in the meantime? It's possible. Still looks like total trash. Maybe at the 618, and then we could potentially look for like a trade setup back to the upside. Me personally, I'm very hesitant to take a position on this just because it's such a trash bag company, and they had so many issues with regulators, and then also like lawsuits for like killing pets and children. For me, not really interested, especially not something trashy like this that I could get stuck holding the bag on. But there's definitely a trade setup to be had there. Even like 100% move back to the upside with a 15% stop loss. 6.3 to 1 risk reward ratio. If it broke down below, this previous set of highs here, based on like, a daily candle close, I would just assume it's going to see continuation to the downside. So that is why I have the stop loss placed below that level, as that would basically invalidate the trade setup. Would not be unrealistic to think that this thing just goes straight down here, gets the remainder of the measure move, maybe like 786 at like $28. Could go completely bankrupt. Maybe somebody comes in and buys it. it's obviously just a trash bag company. There's a million other things to trade, but there's potential for a trade setup there. So Airbnb got that nice pop to the upside as predicted. Very, very bearish looking candle. Obviously a shooting star. Do not want to see the wick larger than the candle. Do not want to see a red candle rejection at the top of the range like that. Saw a continuation back down. I think more likely than not, we're coming down here to fill the gap. That is why it's so important, in my opinion, to take profits along the way. Obviously, that was based on the earnings beat, gap up right here. Now, what happens after that? Well, we have to wait and see. Again, I want to see this level hold. If we don't hold support based on some of these previous like key levels, especially like, I would expect something, and these are trade setups that have been in place for a while. It's not like this was just some like shock and I didn't tell you guys about it. Obviously breaking through key resistance right here gave us the initial 15% move up. A retest of the 0.5 gave us another 15% move to the upside, and actually that overshot as well. So now we are technically above the 236. Got to be real careful here though, because if we can't hold this 236, we could come down here anywhere to a higher low. So if our previous low was a double test of the 886 and now we're peaking, we could easily come back down to like the 618, even as low as the 786. Do I think that's likely to happen? No, not really. I would expect at least initially the 382 to hold. That was our previous support of the descending triangle that we broke down from. Obviously called that out way ahead of time as well. And then obviously now putting in a potential lower high right here, at which point in time we would have to be real careful because this would look like essentially a giant descending triangle. Still very early to tell that, but technically at this point in time, until we take out that previous high, we basically just have a giant channel that we've been operating inside of. So still well above the 200 exponential and simple, but a retest as of now down to the 0.5 or the 618 does seem possible, or in this case, I would say even likely. So this is the initial area I'd be paying attention to. If not, I would really want to see the 618 and that previous level hold. That would look like to me a nice breakout to a lower high, a retest of the breakout level, and then we could easily see a new all-time high down the line after that. At least that's what I would want to see if this is going to remain bullish. So, but overall, Airbnb is legit. Especially, I think, as people shift away from wanting to be in like big hotels and around tons of people and just dealing with rude staff and staffing shortages. And, there's like a mentality shift, I think, and people want to stay in like tree houses and like vans and like weird things that they have on Airbnb as well. So, you're not going to get that from the Hilton. Zillow next, obviously, called out this massive Zillow crush way ahead of time. So touche to anyone who got out of the way of this one. Sorry, Josh Brown, for your getting hammered over the head on this one, losing your 36% and capitulating. Do I think this sees continuation to the downside? More likely than not, it does. Once again, Kathy Wood, basically gets hammered over the head and then sells her position. So great job, Kathy. Once again, you bought the dip, and then the dip took a dip, and then you lost tens of hundreds of millions of dollars. Starting to think that maybe you're not a good trader and that maybe you just got lucky in a bull market by buying like bubble stocks. Obviously that's been my, diagnosis for some time now. We are at a key support / resistance now. So if we hang out here long enough, I do think we get this gap fill close. And also if Kathy sold, I'm tempted to buy just because she always does the wrong thing at the wrong time. 31% move to the upside, 6.8% stop loss. If we do break down from this level and take out the low, that is like a 5-to-1, 4.5-to-1 risk reward ratio. This was also our initial target. So we have hit the initial target. We could see continuation though to the 618, but we are at the 0.5 now. So I think more than likely I will probably see what happens tomorrow, take a small position in this for now, and then if we see continuation to the downside rather than a stop loss, like a hard stop, I will probably just add to the position at the 618 for a potential 75% move back to the upside and a 7.5% risk reward ratio. If we break down from the 618 and close below our stop level of 44.5 and basically like lose these previous levels of support, I will exit this and take the little nod the no nod on Zillow. But overall, I think this is a legit company. I think they just made some mistakes. It was not a surprise, not to me by any means. But obviously this has been in a bear market since, the way I determine it, we've been in a confirmed bear market since somewhere between June and August. So again, no surprise on this one. We put in obviously a head and shoulders pattern right here, got the breakdown head and shoulders, came back down to support, put in a lower high rejection off the 200 exponential and simple, gap down and beat all these idiots over the head, which, I think is hilarious. Hopefully you're not one of those idiots. So now I think it's about time that Zillow fights back. So, will it be a meme stock short squeeze? Yeah, probably. Probably. We're seeing the same thing over and over again. So, but then after that, continuation to the downside. So Wish, Context Logic, still at like that entry level right here, 82% potential move back to the upside. I've showed this trade setup like 20 times. It's been just going forever. So Wish upon a star, maybe this trade setup will play out, maybe not. We're seeing triple bullish divergence. We have exited the bearish control zone. We are basically still at the entry area, 82% move back to the upside to close that gap and retest resistance, 12% stop loss, potential for 140% move back up here to retest our initial breakdown level, close the gap, and then also retest the 200 exponential and simple. Once again, losing a bunch of money. The earnings call was pretty good. They corrected what I would consider to be a big mistake. The majority of the money that they lost was because of a ton of extra revenue that they wasted on advertising, or capital they wasted on advertising. I understand the argument that you want to gain market share and you got to spend money to make money and all that stuff. But I think there's diminishing returns when you're starting to spend like tens and hundreds of millions of dollars advertising. I think a lot of adoption comes from having a good product and just organic growth. But it's weird times. So we'll see if this plays out. It could easily get rejected and go straight to zero. We'll have to see. But I am in that position, obviously. So Bumble, as we've been discussing here, basically redrew the triangle and was talking about how, maybe we need to adjust it slightly lower to have this low go to this low here. Came back down, touched it again, as we were talking about, and now we have broken down from that one as well. So at this point in time, we have closed below this previous low right here. So that to me looks bearish. We have a high now, we have a low, we have a lower high, and now we have a lower low. So if we break down from this 236 and this area right here at $46, it's going to look very, very bad. I think we come back down here and sweep the lows. Obviously did very well months ago on this with a 42% gain. There was a couple opportunities along the way that we could have took advantage of. But to tell you the truth, I'm not particularly bullish on this. I guess the real surprise was the loss. 6 cents per share, and they were estimating 1, but the revenue was a beat by 1.83 million, which is basically non-existent. So yeah, it makes sense. Realistically, the potential breakdown taking us all the way back down to the lows would not surprise me. So does Bumble go back down to 38.50? Buzz, motherfuckers, probably. So, but we will see. Baidu, again, just watching these Chinese stocks with, one eye open, or however you want to say it. We have a key support line now. We're very clearly in a bear market, and as far as I'm concerned, there's definitely some serious potential for the downside, especially if this Evergrande situation plays out, etc. Flipping over to Alibaba, we did get what looks like a potential bottoming pattern, and the inverted head and shoulders did get the entry move down that I was hoping for a potential long here. Did not take the long though. 30% move to the upside potential with 13% downside if we take out the head right here for a retest of 200 exponential and simple, assuming we underperform the measure move of the inverted head and shoulders. It's going to be very, very difficult to get back above $200. Nice round number, and also our key breakdown. Obviously we got the measure move of the breakdown, so we got way out of the way before this happened. Not looking to give back my gains on these at the moment, and also not particularly bullish on China in general. TME, Tencent Music, again, very similar. Looks okay. Saw some bullish divergence come in here. Again, definitely some potential for like a measured move back to the upside. Definitely some potential for a trade setup, but at this time, just not. It's not like high on my list. So we'll see how this develops. If it starts to really look like it's bottoming, more so if it gets above like 934, it will look good to me. If we start closing back above that level, I think it's going to be very, very hard to get back above that level though. And obviously very, very clearly in a bear market, and it looks terrible. Diddy at my foot and I want to touch it. Looking decent, still just range bound inside of our sideways channel. Pretty aggressive candle here out of the bearish control zone. Potentially getting some momentum back to the upside. Again, a retest this time of $10 once again. Sure, probably. Until this breaks one way or the other though, there's really nothing to see here. This is just range bound. So either trade the range or trade something else until it breaks the range. Same with BZ, Kanzen Limited. Instead of a, parallel channel, we just have a wedge, symmetrical triangle. There's nothing to see here until we break in one direction or the other. Obviously got rejected at the blue level we discussed, came back down here, finding support at our ascending trend line. With the exception of this little guy right here, we have respected these trend lines very, very clearly. Obviously this little rejection guy right here. So we're getting very close to breaking in one direction or the other, but no way of knowing which way it's going to break. This to me is a neutral pattern. If anything, I would say probably more likely going to break to the downside just because, China in general doesn't look particularly bullish at the moment. JD.com came back down, found support at 200 exponential and simple, just kind of hanging out there. I do think this probably gets a slight move back up to like 88. We're obviously creating some weird form of a potential inverted head and shoulders or some kind of weird ascending wedge. I think short term it looks like it wants to move up here, but it could easily just break down. I mean, we really just got to wait and see. This one's not nearly as clear as some of the others are. Neo, basically just forming a flag, came all the way back up to the top now, trading between the 200 exponential and simple. Again, the rally that this had on the most recent little like EV rally is pathetic. It definitely underperformed in comparison to some of the other EVs. But I mean, again, that was more of a momentum play than anything actually functional. So I think more than likely we just keep chopping around inside this range. I think eventually we come down and put in a lower low. But as of now, we don't know that. I think this will develop into a giant descending triangle. So a retest of like $30 seems very likely to me. EDU, obviously still in this trade. It has literally done nothing, still doing nothing. Ascending support, we're basically at it right now. Hang on to the 618 in green for now. Nice little 162% move back to the upside for a gap fill. 25% stop loss potential if we break down and put in a new low. Trying to hang on to momentum. It has all this momentum and has gone nowhere. Still looks okay for now. Back inside the bearish control zone. I mean, when's it going to be my time, EDU? We'll have to see. Is it going to pop off? Probably. Is it going to do anytime soon? I don't know. I'd rather be holding spot than options right now, as that time decay is probably going to end up killing most people who took that one. TSM, Taiwan Semiconductor, obviously finished off that 8% move, got all but the finish of the 15% move and still range bound. The least interesting to me of the semiconductor space because of war. AMD, nice push to the upside, sell by sell signal, divergence to the top of the range, very aggressive pump up here, seeing some signs of weakness. I do not think it's unrealistic to think it's coming back down to 118 for a retest, but that is a pretty hefty move down at this point in time. Nvidia got that nice move to the upside, very similar. It wouldn't be unrealistic to think it comes back down to 228. Is it going to get that low? Probably not. Quite a bit of volume at the top of the range here though. Is it topping out? Maybe. Still very bullish on Nvidia. Hard sell signal, top of the range. Should have been in this from a long, long time ago. Obviously, most of us are. So we're less concerned with giving back a little bit. Intel, very bearish. Got the breakdown as expected. Back down to the 40s. Trying to come back up. Looks like it's underperforming at this point in time. Is it going to fill the gap? I'm sure eventually, but it's got a gap back here. It never came back and filled from 59 to 62. So is it possible it's just going to leave this one here too? Yeah, it's very, very possible. Intel is total trash, total garbage. Talk to me in like 2 years. Once the triple bearish divergence plays out on this bad boy and it has a nice little capitulation move to the downside, we'll start looking at some targets. But I think more than likely high 30s is where this is going. So we'll see though. Maybe I'll be wrong, but I doubt it. Triple bearish divergence hasn't put in a new all-time high since 2000. Since 2000. Has not put in a new all-time high since 2000. Probably not going to do it anytime soon. SMH, semiconductor ETF, hard sell signal. Just looks like, it looks like the big boys in the space. Looks like NVIDIA, looks like AMD. Not to be confused with AMC, the crybaby apes. ARKK, once again, looks like trash. Kathy underperforming the market. She couldn't pick a winner. I don't even know how. She should just retire, go away, come back next bull market. Poor Kathy, man. Or maybe hire somebody that knows what's going on. We're back at December 2020 prices. She's literally just wiping out any potential. So spent the entire year in like the biggest, most parabolic bull market ever and made no gains. No gains. $0 for anybody but herself. So exactly as predicted, as expected, as discussed. Again, called out that this thing was getting ready to get absolutely crushed back here at like in the 140s. So, yep, sorry, Queen Kathy. She definitely still has a strong, strong cult behind her. I love watching her little ARK Invest videos. They're absolutely hilarious. The more I watch those videos and I see the comments of people talking about how smart she is and how she lays it out, and then like I'm literally thinking the opposite because all she says is the most ridiculous, moronic things. And the fact that her cult is literally like, oh, can I have another glass of Kool-Aid? This is so good. Right before the poison kicks in and they all die. Absolutely hilarious. ARKF, putting in a pretty bullish pattern, a strong ascending triangle, but again, failing to break out from the top here. Never going to get the measure move if it can't break through this clear resistance at 54.60. Once again, it has lost the 200 simple, barely hanging on to the 200 exponential. More than likely, this thing breaks the upside 33 or 66%, downside 33%. It's probably going to go to the downside. Let's be real. I mean, poor Kathy. Not even poor Kathy. Poor anybody that bought into the cult of Kathy. An entire year during the most parabolic bull run, you could have made hundreds or thousands of percent by investing in crypto. Could have made hundreds of percent by investing in Tesla. Could have made 40% by buying an ETF. And instead, you gave your money to Kathy Wood and she pissed it all away. I'm an active managed ETF because the innovation. She couldn't actively manage her way out of a wet paper bag. Skills. Nice little pop to the upside here. At key resistance / support. Going to be very, very difficult to get through this level. Does it get a pop to the upside? Maybe. I think more than likely it's going to come back down and retest what potentially could be the inverted head and shoulders low at like $10. If it holds $10, I think it comes back up here and tries to break, at least retest 200 exponential and simple, but not looking particularly hot. Teladoc got the retest of the 200 exponential and simple, coming back down here. Looks very weak. Same thing again. Barely holding on to support for now. We'll have to see. I want to see like some divergence develop here, bullish divergence or something like that, and then potentially a move back up. But as things reopen, I think Teladoc will long term probably be okay, but probably just not needed that much. Probably just got way overvalued. Palantir, I know the cult of Palantir is great. They got the gold people on board right here. They got the Kathy Wood people on board. They got the, all different kinds of like little bits of the cult to join them. But let's be real. They have broken down below the 200 exponential and simple. They have broken out of the ascending triangle. This is very, very bearish. At this point in time, it looks likely that this thing is going to see continuation to the downside. Is it possible it reclaims that level and continues to the upside? Sure. But, at this point in time, that is a confirmed break. Even a retest and then rejection leads to continuation and a new low back down. I mean, this thing could go to $13. If we just put a simple Fibonacci from the low to high in place, we can just look for a little bit of confluence and see what we get here. Obviously we have a key level of support at the 0.5 at 20 bucks. Nice round number. A previous low down here at the 618 at like 1650. And then we have our measured move continuation as low as like 12 or 13. So as far as I'm concerned, I would be looking initially at this level for potential support. But realistically, it's probably coming down to the 618. But their technology and the innovation and good formulas and government contract, I don't care. Technical analysis wins every time. UBX, Unity Biotech or Unity Biotrash, they crushed it. They destroyed their earnings. They fucking did amazing. Reported minus 30 cents per share. Estimate minus 36 cents per share. Surprise, 6 cents. Boom, pops off to the upside. This thing is still absolute trash. They have, does it say what they're, oh yeah, oh here it is. Revenue reported 0, estimate 0, surprise, no surprise. It was 0. They don't do anything. They don't have a product. They don't make anything. As much as I hate this piece of trash, the play did play out to the upside. Well, not completely, but was it 63% potential retest of 200 exponential and simple? Maybe continues to the upside. At this point in time, I'd just be counting my lucky stars. I did not enter into this trade. This is a trash bag company. Not really interested in it. But hey, it is what it is. I mean, it just perfectly fits the quote-unquote investing market that we have right now. Unity Software, obviously big volume coming in, very aggressive, like potential sell-off and then continuation back to the upside. Yeah, I mean, it looks great. New all-time high based on closes. I expect this thing to just keep ripping. We obviously had that inverted head and shoulders. Once we got the break of the heart line, the 200 exponential and simple, came back down, retested it. We expected a retest of the highs, broke through the highs. This thing looks very likely to see continuation. Obviously, slight beat on the earnings per share. Slight beat on the actual revenue. But overall, this is a badass company. So I was wrong about this, looking like it was going to maybe roll back over here. And instead, just see that strength coming in. A retest of the top of the channel. And then obviously the all-time highs. And if we do see that continuation and the break of the channel on this one, that could really propel us to the upside here. As our target for that would be roughly the 1.236 and $213. But our real target would be the 1.618 at like 300 bucks. Probably less likely to get there at the moment just because of the current environment, but definitely a possibility. So definitely a possibility. And their software is like freaking awesome and like top notch. So Corsair, still at the entry for that quick little scalp setup right here. Basically doing nothing. Does not look particularly great. Nothing really has changed on this one. I think more than likely we're coming down here to hit that $23 mark. Possibly 18. Very clearly in a bear market. Would not be surprised to see our little pop up here and a quick little 19%. But I am not holding my breath on this one. Zoom. Zoom obviously just once again another rejection, another new low. Still just getting absolutely crushed. Probably sees further downside. Just absolutely terrible. I mean, this thing is now, it's like the Cathie Wood of telecommunication. This thing is back at June 2020 levels. So all the further gains it had, it literally just gave all of it back. And from the peak to current price action or trough, still down 56% from the all-time high. And this was literally like the pan stock of the century. Square looks like it's breaking down from the heart line of the channel as expected. Broke down from the 200 exponential and simple. Maybe if Jack Dorsey cleans up his life and quits tweeting about Bitcoin and actually runs his company, this would do a little better. But as long as he looks like a homeless Bitcoining hippie, Probably just going to go down to the bottom of the range here. I've been just trading sideways forever. I think more likely than not, 191 bucks. Seems very likely at this point in time. Bearish control zone, bunch of red histograms, breaking down from the moving averages. Yeah, looks like it's going down there. Earnings miss. $541 million miss. I mean, what's a $500 million amongst friends? Yeah, I mean, it's really not that bad. I think it's probably just already priced in. What's a $500 million bucks? It's like nothing. Who cares? PayPal obviously got the breakdown as expected from support very clearly in a bear market. You know what actually is the surprise here? For me, I mean, reported $1.11, earnings per share estimate $1.08. So a 3-cent beat, it's nothing, 2.95%. But reported earnings, $6.18 billion, estimated earnings, $6.22 billion. So the surprise was a $45 million miss. So in all reality, you know, I was kind of wrong about this. While I did expect the breakdown, I did expect the earnings to be like a miss because of the lost revenue from eBay. But at this point in time, apparently they have made up for it with some of that buy now, pay later stuff. I don't really know. It's possible we find support here at this previous, you know, resistance levels. This is obviously a very key resistance. We see a touch here, a consolidation here, a consolidation here, a touch here, a retest right here. So definitely worth watching this level, and possible this is going to be at least a short-term bottom. But more likely than not, I mean, this looks like a Adam and Eve top, a sharp, pointy top. That's our Adam, a rounding top. That's our Eve. And then the measure move would give us a breakdown back to the 618 from our panoramic lows to our highs back here. Obviously taking advantage of a couple trades along the way in this that have worked out nicely, but at this point in time, not quite ready. I mean, the gap fill is there. Is it going to happen? I don't know. This one really depends on the market right now. I'm less likely to try to take these quick little gap fills right now. I mean, 10% move back to the upside, 3% stop loss. So, you know, the trade setup's there, 3.3 to 1. You know, it's in the bearish control zone. Looks like it's rounding out the bottom. You know, the earnings was not bad. Looks like it wants to get a hard sell signal, leave the bearish control zone. Bunch of red histograms. Rather see like 1 or 2 green histograms, but we're probably not going to get it. It's probably just going to fill this in like pre-market or something like that, so you don't have a chance to get on board. Could go either way, though. I mean, that is quite a bit of support. So for a 3.3 to 1 risk reward setup on a company that, you know, I wouldn't mind holding PayPal or whatever. So it's could go either way on this one. There's definitely an argument to be made. Remember, it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. eBay with the breakdown, retest of the previous highs. Looks like it really wants to roll back over and come back down here. This thing's been pretty strong. It probably comes down to like that $69 range. I'd really like to see it back down here, retest the 200 exponential and simple, retest that yellow line support and the previous breakout, and then see continuation to the upside. But as of now, kind of just paying attention to like, is there a good way to draw this? Kind of paying attention to something like this. We have a low here, a low here, a low here. So want to see, does it get swooped up right here and then get some continuation, or does it break down? We'll have to wait and see. I think going into the holidays, it's going to do pretty well. So obviously just had that nice little 20% setup off the retest down here and the high. Could have actually rode it out a little further. So I wouldn't be mad to take that same trade again. Amazon, again, just retesting resistance. We saw earlier in the year the head and shoulder situation, the false breakout, failed breakout, whatever you want to call it, did not materialize at this point in time. You know, I've been saying this for a while, though. The longer it kind of like invalidated this range, the less likely the head and shoulders mattered. But at this point in time, back at resistance, whichever way this thing breaks, when it breaks, it's going to go great. But it's been inside this range for, at this point in time, what? Since July 2020. So it's literally done nothing forever. And probably just going to keep doing nothing. I would imagine it's going to have a good Christmas season. The miss was less than 1%. It was a $738 million miss out of $110 billion. So nothing. The surprise was 278 miss on the reported earnings per share. Should have been 890 and it was 612 instead. So it's 31%. It's a decent percentage-wise miss there. But I mean, you know, the market obviously didn't think it was bad since we pumped back up to the highs. We'll see what happens with this one. I'm really waiting for an opportunity to get a hold of Amazon back here. But, you know, the truth is, and I was discussing this in the group also, is, you know, this could potentially look like a Wyckoff distribution pattern, type 2, and then we could see an aggressive breakdown from this. So, you know, while I'm overall bullish on Amazon, is it possible Amazon goes back down to like 2,500, 2,400? It really is. It really is. We'll have to see how this develops, though. Facebook, aka Meta Platforms. You're not fooling anyone, Facebook. We know it's you. Looks very weak. Looks very, very weak. 8 and 21 across the downside. Pathetic bounce back up. And now here we are, barely hanging on to the 200 exponential and simple 821, getting ready to cross back to the downside. Do we lose this level? I think we do. I think it's going to 300. I mean, it's like 10% down. It's not a big deal. Very weak. Could easily put in a inverted head and shoulders bottom and then move back up to the upside. Got rejected at the 0.5. I mean, definitely some bullish divergence here. So Google retesting the previous high right here. Looks okay. I don't know. If this area doesn't hold, I would expect the green ascending support to hold. But could go either way, honestly. And then Microsoft took out the last couple of days in price action, hard sell signal. Again, very, very strong. You know, if this thing starts to break down, it's probably going to come back down here and fill the gap, like 310. But realistically, like between 304 and 310 is probably going to be a buying opportunity. You know, Microsoft is an actual good company. You could argue it has an extremely high valuation. Historically, yes, it does. But, I mean, compared to, like, all the other, like, trash companies there are, would I rather get stuck holding Microsoft at a ridiculous valuation or, like, something that's never made money? Definitely Microsoft. Definitely Microsoft. I mean, look at this chart. You probably could not find a better chart going back to, like, I mean, this thing just forever. It just literally just rips to the upside. So, you know, and I don't think it's not the type of thing either where like tomorrow I think some new computer or software or whatever is going to come out and Microsoft's going to be like, oh, they got us. Shucks. I think this is the same as like, you know, your Googles and your Amazons and your other stuff. It's that blue chip that everybody should have a little piece of. So, but remember, that's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Jumping over to chat real quick. If you are in chat and you haven't said anything, take a moment, grab up your phone or your keyboard and just say, what's up? Let me know where you're at. Tell me if you like the technical analysis, anything. Smash up the like. Subscribe if you're not already. Tell your friends about it. Yo, what's up, New Pathway? Good to see you, my dude. Our Kit says Kathy would make more being a gilf. Yeah, I think probably. I mean, she's old for sure, but she's definitely an attractive older woman. She's for sure a grandmother that I would lay pipe to. She does look a little on the frail side, though, and I think the stress is starting to get to her, though. But I'd take those glasses off, throw them on the ground, and stomp them and have my way. What's up, Bubbly? It's good to see you, my dude. Good to see you, my man. Hell yeah, bro. Yeah, poor Kathy, man. But you know what? This happens every time there's a bubble or parabolic run up, or you go hard in the taint on like, you know, meme stocks or whatever it is. Like anybody could look good in a bull run, you know, when the Fed's printing trillions. It's what happens after that, you know. And I was saying it months ago before even this year started. I was saying about Kathy. My problem is that historically, if you look back at her record, and she's been around forever, she has constantly underperformed. She has never done anything. She has no historical, you know, performance whatsoever, basically. And then she's like criticizing someone like Michael Burry, who, don't get me wrong, the dude is like a perma bear, I'm sorry, you know, since like the housing crisis and everything, and that's like where he got stuff. But if you look at his actual like portfolio and like his performance, the dude slays. So people are like, oh, he's always bearish. Sure, he makes bearish calls all the time, and that's what he's famous for, and that's what he gets like headlines for. But if you look at his performance, the dude fucking slays. He averages like 30% to like 70% per year. Like, he crushes. So don't sit here and be like, oh, he doesn't understand how innovation and technology, and he doesn't get the AI and the electric vehicle. I'm pretty sure he understands everything you do, Kathy, and so much more. So much more. So gold got the first move of our move to the upside, as expected. As expected. I don't think I have it drawn on this chart, but I have it posted in our... Oh, no, it's on here. Yeah. So I have this set up, posted in the trade group from the high right here to the low right here. We basically got the initial retest at the 618, came all the way back down, retested it again, saw some resistance to the 382, came back down, found some support at the 236. We have now moved up to the 0.5. This breakout from this level should take us at least to the 0.5, potentially up here to the 618, or even as high as the 786. Well, I think that's much less likely though, because if we look at on our weekly chart, we have this pink resistance line right here. That is exactly where we touched and topped, and it also lines up with the 0.5. So it's going to be very difficult to break through that. Also, I do see like, you know, gold moves up for like 4 days in a row and like recoups like some of its losses. All of a sudden, like all the gold guys are like streaming. They're talking about how they were right. This is it. You'll never be able to afford gold again. This was your last chance. You should have bought the dip. Told you so. Like, dude, shut up. You're not even right. Gold moved like 10% off the lows. These dudes miss out on hundreds and thousands and percent of gains, and then gold goes in their favor for like 4 days and 10%, and they're like, oh, I knew it. I told you so, guys. Like, bro, be right for like a whole week before you get excited. It did reclaim the 200 exponential and simple, so that is good. That is very good. But let's be careful here, because remember, what I've been expecting was a retest of that $1,900/$2,000 level, and then potentially a breakdown into a multi-year bear market. But gold can't go into bear market. There's only so much, and the this and the that and the reasons. Okay, just shut up. Let's look at the old chart right here from the previous time we topped out in 2011. And you'll notice we have a 1, 2, triple top. We have the exact same symbol. We reclaim the 200 exponential and simple, move all the way back up. Everybody gets all excited. They get their hard-ons. The circle jerk begins, and then we go into a multi-year downtrend, and gold loses over 40% of its value. Does that look similar to right here? Break up here, lose it, come back down, flip the 821 back to the upside, come all the way back up, triple top. I mean, I'm not saying it has to do the exact same thing again, but probably the same players in the gold market from 10 years ago are probably still playing. So I don't want to get too excited here just yet, gold guys. Obviously, love gold, love silver. I understand the fundamental argument behind it. I get it. They're sound money, blah, 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 blah. The currency is garbage. I totally get it, okay? But you know what I do like? You know what's most important to me? Technical analysis and making money. I don't care if I'm right. I care about making money. So pretty sure this is going to be disappointing. Gold also has the most possible headwinds ever, okay? Federal Reserve and central banks don't want gold to go parabolic. So that's one big reason it's not going to go up. 2, the dollar is a headwind for gold, and it looks strong as fuck. 3, interest rates are a headwind for gold. 4, cryptocurrency is a headwind for gold. So there's a lot of, anytime anything starts to happen in gold, there's a very high likelihood that one of those 4 things will just step in and beat the shit out of gold and just push it back down. So silver looks even worse. Barely able to reclaim the 200 exponential, still well below the 200 simple. It looked much stronger for a long time, and now it looks much weaker. So we'll have to wait and see. We do have this head and shoulders inverted pattern that we're paying attention to. If we do break this level, consolidate long enough, we probably do come back up here and retest like $28 to $30. We'll see if it gets there. Definitely building some strength here, building up a little momentum as well. Again, I love gold and silver, but these things move slow and steady. And there's a lot of people that are fighting to make sure that this does not go up. So let's not get too excited. The manipulation is not just going to end tomorrow. Let's calm down, guys. Not you guys necessarily, because those people stopped watching my channel a long time ago because I'm mean to their metals. And I just don't understand. XAU, XAG, gold silver ratio. As we discussed forever, we had a descending resistance, broke that resistance. Gold strengthened compared to silver. We're consolidating. The longer we hang out in this range, the more likely we are to retest the 200 simple. This obviously looks very much like the weekly chart on the dollar. Where we came up to the 200 exponential, get rejected, hang out for a bit, come back to it, eat through it, and then come up to the 200 simple. Is it possible this rolls over and silver strengthens compared to gold? Definitely is. Could it be commodity driven? Sure. Could it be, a bull run starts? Sure. Either one of those definitely viable. Clean energy, green energy, all that stuff. I totally get it. XPT, platinum, basically all but hit our second trade setup here to the upside. Still looks pretty good, regaining the 200 exponential and simple. Overall looks terrible. A lot of headwinds as well. But I do think we got up to 1100, 1109. After that, gonna be tough, but maybe 1200, 1217. So we saw the miners start popping off a little bit. First Majestic, again, sort of looking like a little bit like a inverted head and shoulders. Broke through that 236, which is good. Don't like this bearish rejection right here. We'll see what happens. We'll see where the follow through is. At least we reclaim the 200 exponential. Realistically, this thing probably goes back to like 16 bucks if it can stay bullish. If SILJ, pretty much same thing. Inverted head and shoulders. Looks like a pretty nice bottoming pattern. Same thing. Probably going to try to retest like 1515. Maybe as high as like 1650. Really depends what underlying does. Spot. USAS, been crushing it lately. Obviously got that nice buy back here after a couple failed trade setups off of like our 80 cents level. So far has already played out like, 50% move or something like that? Oh, 31. All right, maybe not that great. 37. So up nice off of the entry there, depending where you got it. If it was off of that descending support line or whatever. But probably is headed up here to the 618. Starting to look like, again, a little bit of a bottoming pattern. Maybe a inverted head and shoulders. Do we get the full 93% to the upside? I mean, this thing has been underperforming like this entire run or as of late. So we will really, really see what happens with this. But it's going to need like the market to stay strong for it to get that move. So long term, I think it does well, though. Tilray and the pot stocks had a nice little pop right there. I thought I had it on here, but apparently I did not. I think I have it in my other. I know I have it on my other one, but I had something like this drawn. Basically had a very strong resistance, popped off, found support at a horizontal and a descending support slash resistance, and then saw that little move to the upside. It's no surprise that I do have positions already in many of the pot stocks. While I'm waiting to go hard on them, I do think that's going to be our next big bull market. So as long as we hold on to this level, this has always been my target for the 4 of our macro 5-wave structure with our macro target up at about like, $1,000. So from 10 to 1,000, what is that? 100x? Could it happen? Sure. Will it happen? I don't know. I'd be happy with 300. If it goes to 300, I'll still be happy. But I'm still not convinced that they bottomed yet. But I mean, at this point in time, the asymmetric returns on these pot stocks is like, I mean, ACB is trading at a discount net to book ratio. Oh, I think actually I might not have talked about that on the actual channel. That was from the 10 under 10, which has been performing pretty nicely this last week. Give back some of the gains on this little pullback, but the miners have been doing well. The pot stocks have been doing well. I mean, quite a few things out of there have been doing well. Uranium stocks have been absolutely crushing it. ACB, again, looking like an inverted head and shoulders. Still very clearly in a bear market, technically strengthening to the downside. Came back down to the right shoulder, put that in. We'll see what happens. If we get that break of like 780, it probably does get up here to like 9 or 10 bucks. We'll see what happens though. Looking kind of bullish, gaining some momentum. Triple divergence. That's at one point in time it had some nice divergence developing. Sort of doesn't off this last point, but we'll see. Again, I'd rather just have a position and add if it goes lower than miss the boat on these, but it's not like you want to have plenty of time to figure that out. CGC, I did enter into a position on CGC the other day, took this trade setup right here. We'll see how it works out. It was looking a lot better, with that initial pop up. Now it's looking like it's going to fail to cross that 821 to the upside, but again, I mean, what was it, a $7 million miss, but 85%? Yeah, they reported a 2-cent loss per share, and it was supposed to be like 16 cents rather. So profitability probably around the corner very soon on this one. It has quite a bit of history and everything. Obviously been bearish on this since like $25. So getting it at a 50% discount looks good to me. Is this going to be the macro bottom? I don't know. Perfect touch of the 886. Nice little entry. Trying to reclaim the 786. Potentially cross the 821 back to the upside, at least for a quick little like 93% scalp. I mean, but realistically, we're looking at a couple 100% for a couple percent, 10-to-1 risk reward ratio just to retest for a lower high. And I think honestly, this will probably be one of the big names in the space long term. So we'll see. URA, new high, still just kind of filling out that wedge. Obviously a very nice position so far. Looking to add on a pullback. Not really looking to buy into the momentum on these, but they could easily continue to the upside. UEC, obviously these are all our uranium plays. Again, potentially could have put in the 4, moving up for the 5 right there. Got the breakout of the ascending channel. Showing a little weakness up here. Again, does it get up to like $6? It probably does. These things are overdue for a pullback, in my opinion, though. Slight miss, and nothing crazy. CCJ, Cameco, again, a bearish pattern, but I would look at it as buying opportunity off of a pullback, or I do look at it as buying opportunity. But again, these things all have like triple bearish divergence, and they're putting in a bearish pattern and new highs. So when they do sell off, it's probably going to be pretty aggressive. I mean, from $26, $27 down to 20, it's not a big deal if you've been in it, but it's like a 30+% drawdown. So, but again, that's buying opportunity all day for me, or adding, or accumulating. Long term, very, very bullish on uranium, obviously. But I mean, I've been screaming that since forever, since before people even knew what uranium was. So, and not like 20 years ago. I'm talking about like before the bull run started, and people were like, actually, this nuclear power thing you guys might be onto something. URNM, again, same thing, bearish divergence, a little less aggressive, technical breakout of the pattern, couldn't hold it. These all look pretty much the same. They just kind of take turns under and overperforming. Technically still above support. Really looking to get this just a little lower. I mean, again, a 20+% drawdown, 25% drawdown looks likely. Copper, still just kind of filling out our little flag pattern right here. Should be bullish, technically, barely hanging on to 200 exponential and simple, losing momentum, bearish control zone. Flipping over here. I think this thing's going to get some downside. Also, people are like, but copper, we need it for the energy in the future. And yeah, China's a pretty big consumer of copper. One could argue that they're the biggest consumer of copper, and they're not doing so hot. So could cause some pressure on the copper market, especially after this thing is already run. We did hit our measure move perfectly. We did break down from an ascending channel that we were consolidating in for some time. So would not surprise me to see this thing back down in like $20, $21 range. Lithium obviously overperformed the 1.618. Got a nice little pushback up here, slightly higher. It does look like it wants to come down here. Again, that hard sell. Couple red histograms. Again, looking for that $85 area to hold, at which point in time I would probably just accumulate for further upside. I have to see, what is that, 18 to 75? Yeah, this thing probably still has some gas in the tank. So again, very bullish on all these. Hydrogen as well. Came up here 1.618, slightly outperformed it. Hanging on for now. Again, I'm looking for a retest of the breakout and then accumulate at like 24, 25. LBS1, that hardwood, that lumber. Again, just filling out our gigantic head and shoulders exactly as expected. Put this trade setup in play back here. 38%, 76%, and then also the perfect call of the target up here that would eventually result in a head and shoulders pattern. Does it have to play out? No, it does not. Maybe it never gets back down here. But the fact that this looks exactly like everything looks when it breaks down below the 200 exponential and simple, comes up, gets rejected, goes into a bear market, and then head and shoulder plays out with a measure move to the downside. Let's hope I'm wrong, because this does not. This tells us housing market and overall health of the health of the economy probably not going to be great for the next couple years, if I'm right. If Caterpillar, nice little move up, had that little entry in play, started pushing up, got rejected off 200 simple. We want to see it chop around here and then move back to the upside. Obviously, bullish reaction rally off of the infrastructure deal. Deere, same thing, slightly technically more bullish. They got all the strikes going on right now. Massive delays for people to get parts so they can fix their tractors so that they can harvest food. So probably not a good idea. Probably not good for publicity either. Antero Midstream came back down, got the retest of that level, potential trade setup to the upside here. We'll have to see how this plays out. Still very bullish on this, but it doesn't look particularly great now. Still have part of that position open. Part of my initial position open, I should say. Cemex, again, same thing. Sort of underperformed that most recent trade setup. Got the rejection off 200 exponential. Does it get up to 200 simple? Maybe, maybe not. Not looking to take the L on this, but could happen. We'll have to see. Looks like it wants to go down. Had that bullish divergence. Maybe comes down, puts in a lower low and a third drive of bullish divergence, and then gets a pop up to a lower high rejection rollover. We'll see. Again, does not weigh good on the economy if that doesn't pump, as we need that cement to build stuff and things as well. CLF, steel and iron, Cleveland Cliffs. That American steel and iron, there's strong arguments to be made for them. Been doing well lately. Had a nice little pushback up. Looking like a double top. We will see what happens. Broke down from that ascending support. Doesn't look great. Does not look great. The key areas to watch are like 20, 21, maybe like 20. And then obviously, a breakdown below 200 exponential and simple. Still early to see on that, but could easily go back down to like 15, 15.50. This has stayed stronger much longer than I thought it would. Ford still just absolutely crushing it, reclaiming the ascending channel. Looks very, very strong. Obviously, the breakout of our descending channel hit our initial target, held our support, and then continuation. Just absolutely crushing. They have a little stake in Rivian too. So, I mean, I don't know. I think that thing's way overvalued, but whatever. What do I know? What do I know about value? What do I know about fundamentals? Apparently the market does not care. Ford, very strong. GM, much less strong, but still looks okay. It's like Ford's ugly sister. Hasbro, again, rejection candle at that same level. Got to get above $100. Got to consolidate above $100. I want to say this thing will be bullish going into Christmas, but we'll see. Got the earnings, got the dividend. Still looks okay. I mean, basically just this. There's so much resistance here, though. Really just got to see it consolidate, and then the move to the upside will probably be epic after that. Works. Looks like it wants to break down from that level. Did take a small position on this for that potential scalp for the 68% with a 9% drawdown. So already gave back probably like half that. We'll see what happens here. Breakdown from this level, and I will be out like trout and expect potential retest of the lows. If we find some support here, I think it's likely we at least get an initial push up to like 211. But realistically, looking for that $3 holla. And, maybe even something crazy up to like $6. We'll see how that works out, though. We'll see how that works. See how I did that? Nothing has changed here. This thing's just creeping on. Creeping along. We have that inverted head and shoulders set up. We have the ascending channel set up. We have the descending resistance break setup. So looking to add or reaccumulate somewhere between the neckline at like 450 to 475 and like 260 to 275. We'll see. Just waiting this one out. Patiently waiting for a sphere to explode on, as 50 would say. Or now I guess it's 25, I think. Got cut in half too. Walmart, WMT, aka America, the heart of America. Looking like a topping pattern here. Looks like it wants to roll back over to our target like 140. Hard sell, bunch of red histograms. We'll see. I think Walmart will do good going into the holidays as well. So, I mean, we're getting towards the end of the year. We'll have to see. A lot of rebalancing probably taking place. A lot of taking profits taking place, especially if we see continuation on like some of the weakness we've been seeing lately. So, let's skip the break today. We're at 140. Let's rip through this crypto and then, yeah, let's just rip through it and cut it off at like 2 hours or whatever. What's up, Honkiness? Good to see you, my dude. Honkiness says, here, do you believe in hedging an investment account? Like with VXX. Yeah, I mean, it depends. It really depends, man. Like, depends what kind of investment account. It depends what your time horizon is. You know, I actively trade my trading accounts. I much less actively make moves inside of my like investment account. Because the truth is, depending on what your time frame is, especially if we're talking about like stocks, more likely than not, anything that's a good investment to begin with, like for a long-term time horizon, is probably going to be a good investment on a long enough time frame. So, you know, if you would have tried to like actively trade Microsoft or Apple or Amazon, you probably would have lost out on gains. Maybe never re-entered because you're too stubborn. Like, so if you have good, solid stuff in an investment account, I'm much less likely to like touch it or hedge it. If anything, you know, if you're expecting a pullback or something like that, rather than selling, you know, a hedge like what you're saying, or like just some options plays or something like that, not necessarily a bad idea. But again, more likely than not, I'll trade against positions in my investment account if I think something's going to happen, like bearishly or whatever. But overall, most of my like retirement / investment account is like set it and forget it. I'd much rather just actively trade independent of that, and play it by ear. Like now it's different in a situation like the big crash, like 2019 when I was calling out like 2020 drawdown before COVID and everything. That's different. When I see something like that and there's a bunch of like blatant signals and, you know, I see crypto about to get wrecked. I see stock market about to get wrecked. I see giant, you know, Wyckoff distribution patterns. I see issues with semiconductor production. I see issues in the repo market. You know, and then all of a sudden like COVID pops up. Sure, that's a completely different situation. That's like, you know, in my opinion, that's like a once in a decade type thing. If I think something like that's going to happen again, it's a different scenario, but I'm not convinced that we're going to see some massive capitulation move in the stock market, or necessarily crypto like right away. In the event that I do, ask me that same question again, I'll give you a different response. But overall, I try to like not mess with my retirement / investment nearly as much, and just kind of trade my own trading account independently. But I also am very diversified between all those different, you know, asset classes. You know, I mean, I always have a nice cash position, crypto position, stocks, including, you know, foreign and all different sectors, not just like, you know, Tesla and like all these like crazy bubble tech stocks. And then obviously real estate as well. So, you know, gold and silver, precious metals, all those things, in my opinion, if you're diversified correctly, even if there is a big crash or drawdown or prolonged bear market, just like sideways, you don't have to worry about like a price or time capitulation nearly as much. So, but yeah, I will trade against my own positions if I see something happening, but very, very unlikely to sell core positions inside of like long-term like investment account or retirement account, etc. So, but you got to remember, like, the stock market is designed to basically go up. Like, the idea is to basically always have more GDP, always have more earnings through inflation and population growth. So the idea is to grow those things over time. I'm somewhat skeptical, or was, going into the last couple of years, just because of how many boomers there are and how few like millennials and Gen X and Z and whatever were investing. But honestly, like, the gamification of like the stock markets and crypto has brought a lot of what would be like never or weren't before investors into the space. So while it does remind me a lot of like 2000, which is when like I started investing in the stock market and everything, and well, around that time, and I got burned. I definitely was like salty crackers for a while there. So while I don't think that's necessarily like, there's definitely a high likelihood that happens again to a lot of these new people, especially with like the crypto and the meme stocks and the, all the other speculative trash that's out there. I think the fact that it brought in so many new people, there's definitely an argument to be made that we don't necessarily have to have what would have been a problem like Japan style in the stock market. But again, to each his own. You're scaring me with the lumber chart. I need to chill. Yeah, it is what it is, man. I hope I'm wrong. You know what I mean? But the fact of the matter is, if that lumber chart breaks down, that tells us there's probably something big going on. And like, if we look at like Caterpillar and a couple of the other like, like infrastructure stuff, there's definitely a high likelihood that we're going into like a multi-year bear market as far as like economic growth and infrastructure. But we'll see, man. Anything can happen, anything can change. But let's be real though. There's a lot of things pointing to at least some kind of like legitimate bear market or like blow up. We are definitely in like a ridiculous bubble. And then if the dollar goes nuts too, that probably means something broke. So, but okay, let's take a look at our cryptos and we'll keep on rolling, baby. And if you're just tuning in, make sure you smash up the like button, subscribe, share it with your friends. If you're interested in the TJD Master Indicator on the screen now, obviously join the group. Be glad to have you. It is a paid group. You can reach out to me if you're curious about that. If you're just tuning in now, remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, so futures chart obviously saw a pretty aggressive candle, got bought up, and now we're seeing some continuation. Probably target to the downside is going to be like 62,100. Not to quote myself, but I basically said we broke out to a new all-time high and didn't see any follow through. Now we have a bearish engulfing candle. I was expecting this. I called it out in the group. I said something to the effect of crypto looks like a wet fart. Call it what you want, but it's still shitty. And that's still how I feel. You could argue that we're retesting the previous highs from like April, but normally, we got a little breakout here. It failed to hold. We got an even higher breakout here, and that's holding for now. If we break down from here, we're probably going to come back down to like 50,000 or so. Yeah, that's all there is to it. That's all there is to it. Not convinced we're just going to be like dumping or anything right now, but there's definitely an argument for it. If the stock market starts correcting too, crypto is probably going to get wrecked. And a lot of the altcoins went down over 20% today. Had some nice scalp moves. The Bitstamp chart, I've been pointing this out specifically in the group recently as well. This signature, okay, looking at this area right here from September 6th, we see the hard buy signal at the top of the range, which I normally don't like when the blue Stoch crosses above the purple Stoch. We see the moving averages diverging while we're above the 200 simple and 200 exponential. And then we see an aggressive sell-off after we take out that previous high. We see, obviously, here we have put in some divergence, a third drive of divergence, and a rejection of the blue slope line. And then we see continuation and consolidated sell-off. So now here we get the hard buy signal more around the neutral range. We see the diverging of the moving averages. We take out the previous high right before it. We see the green crossing back above, the histogram crossing back above the slope line. And then we see what amounts to, you know, basically a fail rejection. If this breaks back down, it's going to look very similar to this right here. So, you know, we break back down, consolidate for a bit. This rolls back over, you know, we'll have to see. I mean, then, you know, we want to see this $3,000 range hold or $50,000 range hold. I would not be surprised to see a retest of the 200 exponential and simple before continuation, or potentially this was just, you know, basically a throwover or a failed breakout, whatever you want to call it. We consolidated forever. We ran back up aggressively and took out the all-time high, and we're seeing like no follow through. That's not particularly great to me. But as long as we hold, you know, this area right now at the 8 or potentially the 21 at like 62,000, going sideways is fine. But if we start breaking down from those levels, it's going to definitely look a little bit sketch. And then just looking at the regular RSI, putting in some very clear bearish divergence between this high and this high, so not good. Same thing with the stochastics. Yeah, I mean, basically same high here and a higher high on price action, bearish divergence, and then same thing again with the MACD, bearish divergence. So not what we want to see. Triple drive, like 3 drives of bearish divergence, is much more reliable, but it could easily have further downside with 2 drives. But again, you know, if we start losing like the 60,000, 58,000 levels, we're going to start looking at those previous highs to act as support, somewhere around like 52 to like 50,000. I'm not going to get like overly bearish on a retest. Actually, I would rather see a retest and then continuation. But let's be real. Bitcoin is designed to have 4-year market cycles. The first one, you know, ended in November. 4 years later, the second one ended in 2017 in December. And now here we are 4 years later in 2021 in November. December, obviously, the next month. So the likelihood of seeing the same thing happen again, to me, is very likely based on the 2 only data points that we have. But, you know, again, we'll have to see. I'm not all in on that theory, but I'm definitely very skeptical. Ethereum broke out to new all-time highs, been operating inside this channel, still operating inside the channel. Again, just looking for a breakdown of the channel or moving average before I get overly skeptical on this. But at which point in time, it has quite a bit of support to hang on to. So I would think like 4,200 would hold. Still looks okay. Hard sell signal, a bunch of red histograms. We'll see what happens with ETH. The ETH Bitcoin chart looked like it was kind of topping out here. We could see a little further upside, back up to like the 0.076, back to the top of our little flag triangle, but more likely than not, hard sell, bunch of red histograms, still has some momentum in its favor. I think probably it's going to break down here. I think I would rather be in Bitcoin right now than Ethereum, but obviously I still have a position with both. Total cap, we'll have to wait and see how this looks in a couple days at the end of the week. Right now, looks like indecision or potential rejection, but nothing to write home about. The only thing that I'm skeptical about here is that this is literally our target. That's a 1.618 Fibonacci extension, and also the 2.618 Fibonacci extension. Like the orange is from the top at 14,000. Well, this was the 14,000 high. To the $4,000 low, the CVD low, and then the fib extension is a 2.618, which is basically where we reached. And then this is a 2017 like $20,000 high and the $3,000 bottom in 2018, and that's the 1.618 fib extension. So we came up perfectly, tagged the 1.618, and we are the 2.618s right here. But just imagine it was over here. We're basically at that level now. So we'll see what happens. Just so happens Bitcoin is at the 1.618 of the $20,000 high, and the market cap is exactly at the 1.618. Seems like a good place to potentially top out. And, you know, we're right at the 4-year mark, right at the, you know, potential cycle. We'll just have to wait and see. I'm very skeptical at these levels. You know, I was discussing with the group today. My problem with crypto now is I'm all about asymmetric returns, and the asymmetric returns are not there. Okay. If Bitcoin goes now from 65,000 to 130,000, which could definitely happen, or say it goes from 65,000 to 100,000, you know, what is that? A 50% to 100% move, depending which one of those targets gets hit. But every other bear market we've ever went into lasts over a year, multi-year, and has like a 75 to like 90% sell-off, depending what you're looking at. So let's just say an 80% sell-off. So for 50% upside with 80% risk, or 100% upside with 80% risk, I mean, that's like a 1-to-1 risk-reward ratio, arguably less than 1, depending on which of those targets you're looking at. So crypto does not look that appealing to me right now. Like for scalps and everything and the volatility, and it's all great, but I mean, the risk reward at these levels is just not there. I mean, maybe I'm just spoiled because I was buying Bitcoin at like 3,000 and 4,000 and Ethereum at, you know, $85, and embarrassingly like Cardano at like 7 cents and Litecoin at $20 and Chainlink at a couple bucks. I mean, just all this stuff is like still the same trash it was before. There's just more people like with their pockets full of trash. Like, and don't get me wrong, some of them aren't straight up trash, but the majority of it, like most of these cryptos have not like proportionately become better projects in relation to their price. So you could argue they were undervalued before and now they're overvalued, but at some point in time, I want to see them revert to the mean and see what the fair value is. And because they don't have earnings and, you know, profits and normal like metrics, we don't really know what that is. So we'll have to see in time. And usually the way we find out is by a capitulation sell-off. So again, not overly bearish or anything, but more realistic than not, the asymmetric gains have already been had. So, you know, and again, you can listen to whoever you want. I'm not trying to sway anybody's opinion on crypto or whatever. I totally believe in blockchain, crypto, the future, all that. But I also believe in market cycles and, you know, reversion to the mean. So Bitcoin dominance, trying to cross back up, still technically negative. Like I said, could easily come back down here, put in a new low, and see like triple bullish divergence before we move up here. Starting to look pretty market cycle like ovary on the weekly. Not ovary like to have babies, but like almost over, like close to over. Shiba Nasty, Shiba Inu, Shib. More like Shiv, because this thing is stabbing people's gains, right? Am I right? Ooh, that was bad. Looks terrible. Looks like it's getting ready to lose this level. Looks like a descending triangle. Looks like a 66% chance that it's going to break down and go to like 0.00003 cents. I mean, I told you guys how I felt about this. It's obviously trash. You know, seriously though. It's definitely trash. It has literally the largest circulating supply in existence. It would have to go to like, I can't even remember now. What was it, like $7 trillion to reach a penny? And the entire crypto cap is like 3 trillion. So it has to double the entire crypto market cap. So crypto has to reach $10 trillion, assuming nothing else moved, and this just filled up the other 7 trillion. I doubt 7 trillion is just going to like come into the market and like all go into SHIB. 7 trillion of value, not actual dollars. So more than likely, probably going to break down to the 382. This is very technical too. I mean, look at these levels. Yeah. God, this thing looks terrible. I mean, it doesn't look terrible now. It looks like it's going to look terrible soon. It looks pretty bad now. It's going to look really bad soon. And all those like PTA moms that are like telling everybody, buy SHIB, it's the future. I mean, that looks a little more symmetrical depending on how you draw it. Like if you use the wick. But I think realistically, we should be using like the close because the wick is probably just an overshot. So probably going to be getting some sort of like scenario like this. That looks pretty realistic. Back down to the 886. I mean, not right away. Not right away. Not in a single candle. It would never get one giant red candle like that. That would never happen. But maybe over time. Maybe slinky theory. Maybe a couple steps down over a few months or a year. Maybe an implosion of a shitcoin that has no value. Matic. We talked about the breakdown from support right here. Obviously, that invalidated this trade once we broke that ascending support down at 618 now. We really want to see this level hold. There's definitely a potential for this level to hold. And our larger blue ascending, we are also back down in like the bottom of the range where we would expect something like this to potentially play out. Again, I would want to go on a close here, not a, yeah, something like that. Close, not a candle or a wick. Solana, obviously got our 1.236 target. This looked very toppy. Hard sell now. A bunch of red histograms. I mean, this thing's way overvalued. There's no, I mean, I've said it a million times. The trade setup played out 20%. Quick little move up here. Sure. It's taking market cap. It's top 10. Solana's the future. Sure. I totally agree with all those things, but the future may be down before it's up. I mean, it may have reached peak mania. It was like $40 a couple of months ago when I was like screaming about it and buying it. And like now everybody wants it at like $240. Sure. XRP, admittedly, I had a nice little scalp trade on XRP. Basically like literally sold the top. So that was nice. Nothing crazy though, small little position. Looks like we're about to get the hard sell. Looks like it's going to roll over. Could not take out the highs here. It looks very, very likely to just be like ready to just dump. Basically hit the top of our little channel right here. Looks like, I mean, it's hanging on to a heart line right now and key fib levels, but looks like it's coming back down to $1, man. I mean, this cult is dead. This crypto is dead. But the SEC killed it, and that's not fair. Yeah, maybe. Maybe it's just trash. And most of the cult members died or gave up and went to a different cult. Basic attention token, no secret here. Had some beautiful, beautiful scalps. Quick little 100% move. Nice little like, I think I did end up like 25% on this one or something like that. Is it possible this thing's bottoming out and it's going to rip back up? It is possible. It is possible. Definitely still have potential targets of like $2 in mind for this. But at the moment, does not look good. Bearish divergence. Oh, hang on. Ooh, sorry. God bless me. A little random sneeze creeping in on me. Bearish divergence between this close. I actually was pretty bullish after this close. Slightly higher than the previous one. But now it just looks like it's developing into bearish divergence, which is not good. If the 382 holds, that's great. If the 0.5 holds, that's good, but not as good. If the 0.5 breaks, it's going to look real bad. So we'll have to play this one by ear. I mean, realistically, I really want to see like this hold long term. So in my opinion, the best thing this could do is just go sideways and do something like way over here. But I mean, that's in like February. Not going to happen probably. So could go either way. Look for a potential scalp on this, but right now it does not look particularly great. Didn't get much of a bounce either off that little sell-off today. Chainlink, hard rejection. Hard rejection. It was looking good, but hard rejection. Yeah, I mean, this thing just, it looks bad. If it breaks above this level, the trade setup still looks good. Ah, what the hell? What are you doing? Got to clean some of this up. That was the fib extension target. Yeah, okay. I mean, so technically it still looks okay, but pretty hard rejection. Couldn't get above those previous tops. We'll see. I mean, there's still hope for this, but I mean, it's going to be brushing up against support here in a minute, and we'll see what happens then. Dot. Can't remember if I told you guys on the channel or just in the trade group, but I took profit on Dot at, it was like $52 or $53. Currently out of my position on Polkadot. I took a couple of scalps today, but I don't have an open position on this. Nothing notable. Seeing some potential for bullish divergence to develop in time. We'll have to see. Probably, I mean, we just really got to see. If this area holds, it'll look okay, like $45. This is also the bottom of the channel. So again, that was a nice little trade set up, like 17%. Already had a nice position leading into that, but I don't know. We'll see. The best thing this can do is hold support right here. If it just goes sideways, though, it's going to look like a breakdown from the channel. And if it breaks down, it's probably going to be headed back down to like 30 or 20 or something like that. We'll see on this one. Does not look particularly great. Uniswap, pretty much invalidating the inverted head and shoulders, just going sideways forever. Again, really has to hold this ascending trend line. Could not even get up to like the entry for the trade setup. Looks weak. Looks weak. You know, I'll change my tune on this. When we see a close above like $28, probably gets the measured move up to like 38, but does not look good. CKB. Okay, this was that nice trade. You can thank Bubblies for that one. Like 50% move to the upside. Holding for now. Looks okay. Looks better than most. Still holding above the breakout. Looks decent for now. Looks decent. You know, really want to see a close above 3 cents. Close above 3 cents, it starts looking juicy for like that 3.6 cent move. But if it breaks down and closes below 2.5 cents, it's going to look real bad. So I guess that's like kind of my line in the sand. If we take out these candles right here, it starts looking real bad. Bro, don't be so aggressive. Yeah, so that's what I'm looking at. You know, basically a breakdown below here, it looks bad. A close above here, it looks good. In the meantime, it's just chop. FTT or FTX. Looks like it's about to get the 821 across the downside. Back down at that same support again. Could not get above that resistance. I mean, it really just looks like a channel at the moment. This is what I'm paying attention to. Is like basically this. Arguably, you know, this. That's probably just, this is probably just liquidity. Same with like the wicks. Or a fake breakout, false breakout, failed breakout. We're at support now. If it breaks down from support now, it's going to look bad. The next level to pay attention to is like 57, let's say $58. After that, the wick at 56.50. If it breaks down below those, it's going to look very, very bad. You know, $52, $48. It's going to look bad if it breaks down from here. If it holds this area, it probably does well. If this holds and crypto starts moving up, it's only a 12% range. I don't even know if there's a trade setup. If you just took the coin toss right now for a retest at the top of the range versus a break to a new low, oh, it's not bad. There's like a 3-to-1 risk reward ratio there. Stop below 56.50 on a close, or even a wick, depending how you look at it. Target of 65. I just assume it stays range bound. Yeah, it's almost 3-to-1. It is 3-to-1 basically. So, Cardano. Oh man, look at that. Got a nice little breakout. Majority of the move played out to the upside, 15% of the 20, and then a rejection at the 0.5. It is holding the breakout level for now. It is holding the Fibonacci support for now. It is still above the entry level, but we'll see. Momentum in its favor. Still has that bullish divergence. We'll see, man. Doesn't look particularly great, but it doesn't look terrible either. But you guys know the main drawback. Charles. FTM. Phantom. Man, it looks weak. This close really like does it for me. This is a new close. Took out the lows of this consolidation right here. Not good. And then also closing below the 821. This looks like it's probably going to roll over. And the wick was a new low. I mean, you could argue that's liquidity, but I mean, a close below this level looks really, really bad. $2.28, $2.28, because that's a close below the one. That basically invalidates this as like the potential for. So if we close below this right here, it looks real bad. And technically, if we go from this close right here to this close right here, we have some very clear bearish divergence. And then also, that's a very clear rejection of the blue slope line, which, that's one of the most powerful rejections. You guys know that. When the slope flips back over blue, the histogram is below it, and then we get rejected. I mean, that's usually is like a top. So we'll see what happens. There's still potential, but this looks pretty bad. Coinbase hit our target perfectly, beautifully touched the 786, and then massive rejection. Very, very toppy looking candle, very rejection looking candle, and then broke back inside of the ascending broadening wedge. Probably revisits either the middle of that wedge around 275, possibly even the lows. This looks very bad, very bad. Hard sell signal too, lower high rejection, and failure to hold as support. This thing probably gets wrecked. Yeah, and big miss on earnings, but it's up year over year. Because I don't care. I don't care. It was a $302 million surprise. Okay, that's $302 million surprise. Not good. But if we go to 100,000, if Ethereum at 10,000, the Coinbase and the sure, okay. If we do that stuff, then the next earnings report will probably look good. Okay? But right now, this looks like shit. The chart looks like shit. The earnings look like shit. Everything looks like shit. But the year over year, you can't what's the term I'm looking for? Cherry pick. Can't cherry pick your info. You're either going to use technicals or fundamentals, but don't cherry pick. Go by all the technicals, all the fundamentals, or a combination of the two. You can't just say, this missed, but that didn't, so I'm bullish because the one I wanted to happen looks good. Or one of them looks good, but the other don't. No. You either beat your earnings by a lot, or you miss your earnings by a lot, or enough that it doesn't matter or whatever. Obviously, the market agreed with me that this was not good. Could hold there and then continue to the upside. It is possible, but doesn't look good to me. BITO. Again, there's still not a bunch of info here. It was looking okay, and then obviously that's a pretty freaking bearish candle. And then, there's like no trade volume on this thing, but like not even just volume, but like actual like price action. But, this is a pretty big gap left behind. So it probably fills the gap, which means probably Bitcoin's not looking great. And again, this just looks like a big reversal, like an island reversal type pattern. Not as clean, but same kind of mentality. Hood, I did take a small position on Hood here. Took a little shot on the Hood. Obviously did not work out particularly well. We're like down at the stop loss. I'm still in this position. I'm not mad about it. But it doesn't look particularly great. Yeah, it's down like, I think down, I want to say I entered like right here, slightly below the initial entry. So it's down at least like 5 or 6% right now. Still a nice target to the upside, 42%. I still think it gets there, but at this point in time, that is technically the lowest close ever on this. And it just had some bad like data hack news and this, that, and the other. So probably goes lower. It really does. So I don't know. I might just dump it and chalk it up as a loss. We'll see. We'll see what the pre-market looks like. I think post-market it closed up a decent amount. If pre-market, I don't know. We'll see. I got to just wing it on this one. I don't really like taking a loss, but I'd almost rather just chalk it up and just get out below the stop loss if that's what's going to happen. But it's a small enough position that if I'm stuck holding the bag, I think Robinhood eventually, one day, trades back above like $35. So one day in the future. Maybe. I don't know. Maybe not. MicroStrategy, breakout, retest. It's holding for now. Still looks okay as long as it holds this area. Probably still does get the move to the upside. It's definitely trash though, and Michael Saylor is a scumbag. But the trade setup still looks okay. But Michael Saylor is a bumbag, scumbag. Don't talk about our cult leader like that. You're mean to him. I love Michael Saylor. I don't know. GME. I mean, what a rejection. This thing sucks, dude. Could have got a sweet, sweet push back up here to a lower high and made all the little game stonkers happy. Instead, it gets a massive rejection and just starts pouring back over. This looks like trash. AMC is even worse. These dudes are like, God, it must suck. You're like, oh, I should have put my money in GME. Fucking AMC. Stupid apes. Yeah, this looks terrible. It just broke back down inside the range. Could not get any follow through at all. Could not hold the breakout of resistance. I mean, couldn't even technically break out of the purple resistance. Looks terrible. It's probably going down. When this thing goes down, it's probably going to go down hard. Hopefully I'm wrong for the ape's sake, but you guys are, you're going to be unloading the dishwasher again real soon. You're going to be apologizing to your mother for running your little cocksuckers. Okay? She'll be like, oh, I thought you were too good to unload the dishwasher and you didn't need your allowance. Thought you were moving out of the house / basement. I thought you were going to try to live on your own. Oh, AMC went to 0? Oh, okay. That makes sense. Newegg. So finally this little bitch popped off here. The old Neweggers are pretty happy right now. What was that? 50% move in a single candle. Absolutely beautiful. In and out like the burgers. Wouldn't want to be stuck in this piece of trash. Yeah, I mean, one candle up, 47 candles down, one candle up. So probably just 47 candles down if I had to guess. Bed Bath & Beyond, same thing. Trash bag, breakdown of the descending triangle, gap fill, retesting resistance. I mean, technically it doesn't look terrible, but it's probably just going to get rejected here and dumped. It's probably just going to roll over. And again, the fundamentals on this are so bad. But at the same time, there is definitely an argument to be made for the 0.5 and then just breaks out to new all-time highs. But you got to like know something I don't know. This is the click scenario. They're like, click 2's coming out. Everybody loves it again. Bed Bath & Beyond to the moon. DraftKings, another one of Kathy's winners, broke down from support. I almost entered a position on this. Glad I didn't. Broke down, rolling over. When Kathy announces that she sells down here at like $31, I'll probably take a buy. I'm just going to counter trend her. Let's just stop doing technical analysis and we'll just counter trend Kathy. She's terrible. She is terrible. Yeah, I mean, back here at support, the lowest low, cycle low close right here. So now we have a high, a low, a lower high, and like same low. I mean, this thing's probably going lower. I mean, realistically. When Kathy sells at 32 or whatever, I'll probably take a position on this, but looks bad. All right, bros and lady bros. We did it. We made it to the end. Hooray. Crypto trend trader. Yeah. Oh, yes. Appreciate y'all tuning in today. Make sure you like and subscribe. Smash up them likes, my boys. Hit me up if you're trying to get into the trade group. If you're interested in the indicator or you have any questions, comments, feel free to share this on social media with your friends. I will probably do some excerpts throughout the week of some of the random clips. As these live streams literally do nothing, I basically just do these for the group members and the people that, follow but do not participate, as I get literally 0 new subscribers ever. So apparently the 3-hour in-depth live streams are not working. I might have to just transition back to like 15-minute quick videos like once every day or two, and then just do the live streams for the group members only. I don't know. We'll see. I try to give away as much as I can, but the fact of the matter is if I'm not growing the channel and the group or one or the other, it's really not beneficial for me to just keep doing this. I do enjoy it. I enjoy giving away the technical analysis, but if this channel's not growing and I'm putting that much time into it, daily, weekly, whatever, it's not really sustainable over time. So while I do enjoy it, I enjoy giving away the content and technical analysis for free to everyone. If it's better for me to do shorter videos that I give away more often, and then incentivize the group members only with the live streams, I'm probably going to transition to that setup. So, but give me your opinion. If you don't want me to do that, I'm glad to hear about it. If you think that's a good idea, if you don't really care, but you just want to tell me like where you're located, I don't really care, whatever. Just comment. Maybe that will help with the algorithm. But you know, you guys are my like marketing team because I don't have social media. I don't use social media. So if I can't get you guys to be sharing this and helping me recruit people, YouTube is obviously not helping me get out there. So I got to change something up. So as much as I would like to continue giving away as much as I can for free, I may have to transition to a more sustainable long-term model. So Bubbly says, yeah, I got to do the short videos to grow up, brother. Yeah, for sure, man. I can definitely see a like drop off when I went to live streams. But again, you know, I don't make anything off this channel. So the main goal is like to basically do what is sustainable in my opinion. But at the same time, you know, it's not like the group is like massive and I'm like a millionaire from that either. It's more just about like helping out and sharing and giving people access to like the one-on-one. Yeah, definitely about the algo. And it's not like people don't really comment that much. People don't really share that much. So the algo is not going to really like overly respond. And, you know, honestly, if we go into a bear market or whatever, that's not going to look good for crypto. It's not going to look good for views. It's not going to look good for stocks. Like, it's definitely not going to help the algo and the viewership and whatever. So realistically, probably like cycle-wise could be too late anyway. But at least it was worth a try. It was worth, you know, trying out the live streams. I do enjoy them. I like interacting with everybody more. But realistically, probably going to be going back to excerpts from the live streams, aka like short clips, once a day or once every couple days, and then just doing these like privately for the group members, and then that way there's more incentive for the group and more benefits for the group, but then also I'm still like sharing with the community. But I mean, I've given away hundreds of phenomenal trade setups that have gone up tens, hundreds, thousands of %. So at this point in time, if I can't get support from people after giving away all this stuff up through either like shares or recruitment, you know, and then all the indicators and everything, I'm probably just preaching to the choir on this. I mean, so yeah, definitely, man. I mean, I'll adjust it. But again, you know, I wouldn't mind doing like 2 full live streams for the group members, Bubblies, but just only giving them to the group members. So there's more incentive for the group, because I mean, I definitely want to feel like the group members getting what they get out of it. These are really all for the group members, and I just do them live for random people to watch as well. But it's realistically, I mean, it's the same like 75 to 150 people that view these videos all the time. And 99% of them never even comment. I'm sure they don't share. And 90% of them don't even like. So do I really give a fuck about them? A little bit, but probably not. I mean, if you're like listening to this and these videos have helped you or you've made money off them, leave me a comment. Let me know so that I can at least have your feedback. But realistically, I mean, I've all but made up my mind at this point in time. So yeah, for sure. Just those quick little excerpts. But yeah, that's it for tonight, guys. I appreciate y'all chiming in, tuning in. I hope you enjoyed the technical analysis, the trade setups, and all of my foul mouth and random ass jokes. I appreciate each and every one of you. Thank you all for your likes, your subscribes, your comments, your views, and to the group members, obviously, much appreciate you guys and your support. But that's it for today. I will keep you tuned in and on top of these markets in real time in the group and twice a week for everybody else, at least until something changes. But that's it for tonight. Crypto Trend Trader with our Wednesday midweek market wrap up. It is 11/10/2021 at 10:26 p.m. Eastern Standard Time. And Bubbly says, I don't think the problem is people sharing to boost it. It's the content. Your streams are quality, but some people don't want to watch for this long. Oh, yeah, for sure. Yeah, I get it. I mean, it's definitely a combination, though. Like, the algorithm looks at interactions. It looks at shares. It looks at likes. Looks at subscribes, all that stuff. But if other people don't share it, if the algorithm doesn't share it, it's basically just, you know, a perpetual, like, downward slope. And I mean, I literally gain like no subscribers off these live streams. So as good as it is to give them away and make people money, it's not going to help me grow the channel, if that makes sense. I don't lose subscribers over it most of the time, which is good, but I would rather get to a sustainable, larger size and then do these consistently, or do them specifically for group members, so that you guys get more of a benefit, than just give it away and make that like the main thing. But anyway, yeah, that's it for tonight, guys. Everybody have a good one. Crypto Trend Trader